Welcome back. We are now here to discuss Foreign Trade Policy 2023. Before we read Foreign Trade Policy 2023, let me give you a brief about how this entire thing functions and what are the parameters which we are going to look into. In 1992, government came up with an act, Foreign Trade Development and Regulation Act 1992. As the name suggests, it was very clear that its objective is to develop and regulate foreign trade in India. Because prior to this, India was a closed economy. So in 1991, there were various reforms which were made to suit the Indian market, and various import restrictions were also removed. On the same lines, to encourage exports from India, government wanted to bring up certain other benefits. All that is accomplished because of this Foreign Trade Development and Regulation Act 1992. Now, if you see the heading, we are reading Foreign Trade Policy. Why not Foreign Trade Development and Regulation Act 1992? Because this act gives the entire power to frame foreign trade policy to central government, and all the provisions related to benefits or restrictions are embedded in foreign trade policy. So what we basically study is foreign trade policy. A new foreign trade policy was introduced with effect from 1st April 2023, and this foreign trade policy 2023 will be in effect unless the government changes this. Obviously, certain amendments may take place on a regular basis. Now, who is the authority who regulates this? The authority regulating this entire foreign trade policy is DGFT, Director General of Foreign Trade. As you have CBIC for indirect taxes, CBDT for direct taxes, foreign trade is completely regulated by DGFT, Director General of Foreign Trade. And below that, you have regional authorities. What's the function of these regional authorities? Regional authorities basically help to monitor the documentation part. See, the regulation, formulation and various clarifications which are to be given, all those are given by DGFT. But to check the documentation, to have a look at what is going on in the trade, to issue notices if there is a non-compliance, to make sure that if the benefits are unduly taken, then to recover that amount, all that is done by regional authorities. So regional authorities basically functions in the form of officers doing their duties, proper officer doing these duties in customs and GST law. Now, DGFT is a very powerful body. Let me also bring one very important aspect about DGFT, that it can give a clarification with regard to foreign trade policy, and until and unless it is outside the foreign trade policy framework, it will be final and binding. And that's the strength of DGFT in regulating entire foreign trade. Then, to support DGFT, you obviously have CBIC on one side. You have RBI because it will involve foreign currency. So RBI is also an important functionary in the entire working or smooth working of foreign trade policy. And then you have state GST departments, state government departments for CST, Central Sales Tax, because EOU also gets a reimbursement of Central Sales Tax, which is even today applicable on petroleum products. So on those things, various benefits are given with the help of state governments as well. Now sir, where does the benefit come from? Which is a stronger law? Is foreign trade policy a stronger law, or customs or GST Act is a stronger law? Let me tell you, the framework of the policy is designed from foreign trade policy, but the exemption notifications have to come from customs and GST notifications. So the benefit flows from customs and GST if there is a tax or duty benefit. But who makes that policy? That is designed under foreign trade policy. DGFT formulates and regulates that. So when we put it as a comparison between who is stronger or which is stronger, obviously the customs law and GST law are stronger compared to foreign trade policy. It cannot go beyond that. It can give the benefits, but those benefits will flow from custom notifications and GST notifications. Now, why was the basic need to bring foreign trade policy? Two important aspects which are the framework for entire foreign trade policy is to develop exports and to regulate import and export. To develop exports and to regulate import and export. Obviously, we try to regulate both import and export, but when it comes to development, the basic idea or the basic premise on which foreign trade policy is made is to develop exports. Now, how does government achieve all this? By bringing various policy measures, by bringing various benefits to the trade. Let me start with something very basic. I'll just ask a question, think over it. Say suppose a businessman comes to you and he says that he is only in export business. Then what will you suggest him? Will you suggest him a domestic tariff area unit or a EOU/SEZ? I presume that you know the difference between domestic tariff area compared with EOU or SEZ. Export oriented units or special economic zones get bigger benefits and they have a responsibility to export, while domestic tariff area units are situated in any other place other than EOU and SEZ, and they basically don't have the burden of being exporters. They can supply in the domestic market as well, they can supply outside India. Now, if a person comes to you, a client comes to you saying that he is only into export business, what will you suggest him as a unit? What should he set up? Should he set up a SEZ EOU or should he set up a DTA unit? I will suggest him to set up a EOU or a SEZ unit. What's the benefit, sir? See, one benefit which is common for both EOU and SEZ is they can import inputs and capital goods without custom duty. Any raw material, any machine can be imported by a EOU or SEZ without payment of custom duty. Major benefit. Obviously, to substantiate this and to give a incentive to the exporters, government has done this. But what's the advantage to government, sir? Obviously, they want EOU and SEZ to export their products. Now, EOU comes from FTP. So, the origin of EOU is in FTP. That means, are we going to learn EOU in detail? The answer is yes. The origin of SEZ is in SEZ Act 2005. Now, all the provisions relating to SEZ is a separate topic altogether. You don't study in foreign trade policy as the benefits flow from SEZ Act 2005. So, you are going to basically study EOU, and along with EOU, there are various other software technology parks, biotechnology parks, electronic hardware technology parks, which also get substantial benefit under FTP. And the major benefit which they get is they can import inputs and capital goods without payment of custom duty. No need to pay basic custom duty, no need to pay social welfare surcharge, no anti-dumping duty, no safeguard duty, no countervailing duty on subsidized goods. This is the major benefit. Second, EOUs, if you supply to them, then it is regarded as a deemed export even under GST. You would have seen this surely in your GST that any supply to a EOU will qualify to be deemed export. There are various benefits attached to deemed export. There are two things: deemed export under GST, deemed export under FTP. Both are different, but there are some common points between both. Deemed export, the goods don't leave India, but still you get some benefits from government. We will discuss the deemed export provisions as well, which is there in foreign trade policy. SEZs get another major benefit, which is any supply to SEZ is regarded as a zero rated supply under GST. Meaning, sir, you will not have to pay GST if it is used for authorized operations of that particular SEZ. That means if you are making a supply to a SEZ, it's a zero rated supply, and the second zero rated supply which is there in GST is export of goods or services. So supply to SEZ is on par with export. Whatever benefit you get for export, you get the same benefit for SEZ. That means you can do ZRS supplies with payment of GST or without payment of GST. Both are acceptable. This was the GST benefit which you have already seen. Plus you also saw a major benefit of custom duty, which is same for EOU and SEZ. Now, say suppose another client comes to you saying that I am only into domestic business. What will you suggest this person who is only into domestic business? In this case, you will suggest him to open a DTA unit, domestic tariff area unit. Now, what's the benefit of DTA unit? You don't have any obligations with regard to export. You can supply in the domestic area without any restrictions. You can also do exports. But say suppose a person comes to you and says he is doing domestic business and export business. Then in that case, what will you suggest him? See, if both the business are matured and the businesses can be separated at two different places or they have their own individuality, then option 1 would be to set up 2 units. One will be a SEZ/EOU unit and second one will be a DTA unit. SEZ will enjoy the benefits which are available to SEZ and EOU units. DTA will make domestic sales. But if the business is not too big, then it's not possible for a business to set up 2 different units because he'll have to maintain everything separately. And that's where option 2 would be to set up a DTA unit. But sir, if I set up a DTA unit, what about my benefits for export? Let me tell you, even when you have a DTA unit, FTP tries to give you some benefits. In fact, GST benefits are also available, custom benefits are also available. Let me show it to you. DTA unit, the first benefit which can be enjoyed is duty remissions. What's the meaning of duty remission? Duty remission is the duty which you have paid is being given back to you. So you first paid some duties or taxes and the refund of that is being given to you. That's duty remission. What else can be there, sir? The second thing is duty exemption. Which one do you think is better? Duty remission or duty exemption? Obviously, duty exemption is better. Reason? In duty exemption, you are not required to pay those taxes. While in duty remission, first you pay those taxes and then you get a refund. And you know how difficult it is to get an indirect tax refund from department's pocket. So obviously, refunds are available. I'm not saying it's bad, but exemption is much better. It also helps you to have a control on your working capital requirements. Duty remission, the first thing which is there is duty drawback. What is duty drawback, sir? The tax which you have paid on import of something, and when you export that, the duty which you paid on import will be given back to you. It's a form of refund called as duty drawback. Second is refund under GST, which you have obviously learnt in detail. You know this very well, that whatever you have paid under GST can also be taken as refund. That is zero rated supply refund, which you had learnt in detail. Duty exemptions. Now, duty exemption, when you talk about duty exemption, there are various benefits which government has provided in the form of duty exemption. The first benefit under duty exemption is advance authorization. Advance authorization. Now, what is advance authorization? Let me tell you. In case a person gets an advance authorization, then he can import inputs without custom duty. Sir, this is the benefit which EOU enjoys and SEZ enjoys. Yes, exactly. So even by being a DTI unit, can you get some good benefit? Yes, that's advance authorization. And this advance authorization comes from foreign trade policy. Now you understood. Government is trying to give a benefit which is available to EOU or SEZ in the form of various benefits under foreign trade policy. So EOU or SEZ enjoy import of inputs and capital goods without payment of custom duty. That benefit can be seen here in the form of advance authorization for inputs which can be imported without payment of custom duty. But when government is giving you something, will government want something in return? The answer is yes, government will want something in return, and that something is return is you will have to meet export obligation. The name has the meaning, export obligation. That means you are obligated to meet export targets which government is going to give you. See, when you import, you have spent foreign exchange. Now when you have got this, I gave you a benefit of importing without custom duty. Now I need something from you. I need you to earn foreign currency for the country, and the law says export obligation is 15% value addition. That means if you have spent $1,000, government wants you to earn $1,150. How did you do this math? $1,000 plus 15% value addition comes to 150 total. 1150 should be your export. That's called as value addition. We will study these terms in detail as we move forward, but I'm just giving you an overview of what is the purpose of bringing advance authorization. Fair enough. Is there anything else? Yes, there is DFIA. Now, what is DFIA, sir? Duty Free Import Authorization. Duty Free Import Authorization. What does that mean, sir? Sir, again inputs. Now, slightly different from advance authorization. The name has the meaning. Advance authorization, that means you don't have to pay custom duty at the beginning. when you import your inputs. But in DFIA, government has some trust deficit, and government says that I want to give you a benefit, but first you prove me that you have exported. That means here step 1 will be export goods, then get authorization. What is authorization, sir? License. Get DFIA, and then you can import without custom duty. Sir, but I have already exported. Now, either you can use it. So in this case, what you can basically do is you first export the goods, get the DFIA because you have proven your exports, and then you can import inputs without payment of custom duty. Sir, but first I have exported, now I don't want to import, then what do I do? Let me tell you that these licenses are freely transferable. Freely transferable meaning without any restrictions. Don't think free means free. Here free does not mean free. Here free means without any restrictions. You can freely transfer this. When it comes to advance authorization, these are subject to actual user condition. What is this actual user condition, sir? Only you can use it. No one else can use it. That means if you have imported, you cannot freely transfer it. Advance authorization, strict. And here the export obligation which you need to meet is 20% value addition. So that means government requires you to meet a higher target of value addition in case of DFIA, duty free import authorization. But in case of advance authorization, the benefit is that you can import first without custom duty, and then you can export the goods. Now, this is when it comes to import of inputs. If you are eligible for advance authorization, you can go for that. Otherwise, at least you have DFIA option where you can still take the benefit. But sir, here when you say 20% value addition, will we do a computation of this? Yes, when we discuss DFIA in detail, we will do that. Now the third benefit is EPCG. What is EPCG, sir? Export Promotion Capital Goods. Export Promotion Capital Goods. Name has the meaning. So, what does this give, sir? You can import capital goods without custom duty. Sir, can we combine advance authorization and EPCG? The answer is yes, you can go ahead and combine advance authorization and EPCG. In that case, you'll be able to enjoy not the same benefit, but at least a very good and substantial benefit with regard to what a EOU enjoys. Even in EOU, you can import inputs, capital goods without payment of custom duty. Here, there will be some restriction of what input, how much input. There will be some restrictions. But you can still go ahead and import inputs and capital goods by using advance authorization and EPCG. Are these two very good schemes which have been launched under foreign trade policy? The answer is yes. Will government want something from you? Obviously, yes, sir. When government is allowing capital goods, a machine will have a very high custom duty, and government is giving you a relief for that particular amount. Will you have to meet something? The answer is yes. You will have to meet export obligation. And what is the export obligation here? First, your average export should be maintained. That means last 3 years whatever you are doing as export, that much you should continue to do. Plus you have imported a machine, so your turnover should go substantially up, and your export should also substantially go up. So you will have to meet the export obligation of 6 times the duty saved in 6 years. 6 times the duty saved in 6 years. So you get good time to complete this obligation, but 6 times the duty saved. Say suppose you have saved 30 crore as duties, then export obligation which you have to meet is 30 crore into 6, that is 180 crores in 6 years. And remember, this has to be over and above your average because you have imported a machine, and when you import a machine, your production, your export should substantially go up. This is what the law has provided with regard to EPCG. Is it a very good benefit? The answer is yes. It's a very good benefit for capital goods. Is there anything else, sir? Because I see 1 is written here, 2 is written here, and there is still some space here. Shouldn't we give some other benefit to exporters? The answer is yes. The other benefit which is given to the exporters is RoDTEP. What is RoDTEP, sir? Remission of duties and taxes on export products. We'll study it in detail, but I'll give you a brief about what it is. See, what happens whenever you are exporting goods, GST, you'll get a refund. If you have paid some custom duty on imported raw material, etc., that also you can claim as duty drawback, or you can claim a exemption under advance authorization or EPCG. But what about central excise, VAT? Sir, but central excise, VAT are not there now. Petrol, diesel, crude oil, aviation turbine fuel, natural gas. Remember, all these products even today suffer central excise and VAT. Now, what about that central excise and VAT which has become your cost? Or when you take transporter service, transporter would have incurred that petrol diesel cost, and that became a cost to the transporter, so he would have charged more from you. Ultimately, now you are the exporter and you are bearing all these taxes. Shouldn't you get a relief or a benefit or a refund of those taxes? The answer is yes. Government has said, I will give you those taxes as a refund in the form of a percentage of your FOB value of export. So say suppose you are exporting for $1 lakh, maybe 1% of that, maybe 0.5% of that, maybe 0.1% of that. It varies from product to product. Percentage of FOB, value of export, will be given to you in the form of e-scripts. And sir, what will we do with this RoDTEP? Does it come in our bank account? No. This is in the form of e-scripts which can be used to pay basic custom duty. Sir, what if I don't have another import? Then you can also transfer these scripts, because these scripts are in the form of e-scripts which can be used by either the person who has done the export or anyone else who is importing it. You can sell it to that person and he can use these scripts, and that much basic custom duty can be paid by using these scripts. So it is like a cashback. I mean, in simple terms, when you make a transaction online and the portal or the service provider gives you a cashback, same way here government is giving a cashback, and this cashback has relevance. I mean, the reason behind this is you would have incurred some duties and taxes which would have not been refundable at that point of time. So as now you are exporting it, we are going to give you a refund of these taxes. Is this a major benefit which government is giving? The answer is yes. This is a major benefit which government is giving. Okay, so we saw duty remission, we saw duty exemption, we saw RoDTEP. Is there something else as well, sir? Yes, government gives status holder certificates 1 star to 5 star, 5 being the highest rating, to regular exporters. And are there some benefits to status holders as well? The answer is yes. Status holders also enjoy various benefits under foreign trade policy. The best benefit is that you don't have to submit bank guarantees wherever required in the law for taking a benefit under customs, as may be approved by status holder scheme. Is there something else which government is giving in this foreign trade policy? The answer is yes. Now government is also trying to develop district hubs. Say suppose Jammu and Kashmir is famous for Kesar. They will give a GI, geographical tag, geographical indicator, that these are from Jammu and Kashmir, and will develop that district for the purpose of exporting those Kesar products. So what will happen because of this is automatically each district will get substantial benefit in the form of export earnings, and that's what government wants. Foreign exchange earnings should come into India because we spend a lot of foreign exchange in case of imports which we carry on. So to sum up, what are we going to learn? Let's have a look. See this entire screen. I started with what is the relevance of foreign trade policy. If you are only into export business, what you will suggest a client? You will suggest that open a EOU or SEZ. You will get to import without payment of custom duty. EOU, get the benefit of deemed exports under GST. SEZ, get the benefit of zero rated supplies. If you have domestic business, then you can set up a DTA unit. If you have both domestic as well as export business, then in that case, one option is you go for 2 units and the other option is you open a DTA unit. But sir, then how will I enjoy the benefits which various other export businesses are enjoying? Don't worry. Government has come up with various benefits. 1. Duty remission. Allowed, sir? Yes, why not? 2nd, duty exemption. I mean, one of them will be taken. Either you'll get into remission or you'll get into exemption. Once you get into exemption, you are not going to pay anything. But say suppose you get into duty exemption and on some products you have still paid custom duty. Can you claim a duty drawback? The answer is yes. These taxes will be refunded, because don't forget one principle which I am sure you know. Indirect taxes are consumption based taxes, and whenever we are exporting goods, let's export the goods, not the taxes on those goods. So government gives a refund of all those taxes. 1. Duty remission. 2nd, duty exemption. Duty exemption, are there various forms? The answer is yes. Import of inputs without payment of custom duty. DFIA, duty free import authorization. First you complete the export, thereafter you can get this license and then you can import inputs without custom duty, freely transferable, export obligation 20%. Advance authorization, not freely transferable, it is subject to actual user condition. I'll talk about it in some time. Export obligation has to be met, and this is the benefit. EPCG, you can import capital goods without custom duty and you have to meet the export obligation. Do you get RoDTEP? Yes. Sir, this RoDTEP, can a EOU claim? At present, no. We will see it. In future, government may allow it, but at present, RoDTEP is not given to EOU SEZ. Status holder, everyone can take, anyone. Sir, EOU SEZ also, no problem at all. Status holder benefit is available to everyone who has proven track record of exports. So prima facie, these are the things which we are going to study. We will talk about all these in detail, but what I need you to do first is I want you to go to your notebook and you first mention this. Give a heading foreign trade policy, and in that main point number 1, legislature, and you can write this entire thing which is there in this amoeba. Regulators, this is the objective. You can pause the video and write this legislature and regulators. I hope you have completed this, and then what you are going to do is purpose and schemes. Under FTP, under this purpose and schemes under FTP, you are going to write this entire area, this entire structure. This will help you to quickly go through and understand why you are studying this topic. That will help you to understand this topic much better because it involves a lot of theory provisions. So understanding the structure is of primary importance. Okay, I hope you have paused the video and you have written this as well. Now give a heading in your notebook. Point number 3, some important terms. Now the some important terms is to get a starter and to understand all these schemes, we need to be very strong with these terminologies. Now in this some important terms, you'll mention A, actual user condition. Now what is actual user condition? I'll give you an example. Can I use your driving license? The answer is no, because driving license is subject to actual user condition. Only the person who has the driving license and whose name is there in the driving license and whose photo is affixed there, only he can use the driving license. It is subject to actual user condition. So you'll find that lot of authorizations. What is authorization? License. Authorization. So these licenses are subject to actual user condition. It means that only the person who has the authorization should use it. Obviously, the opposite of this will be freely transferable. Those authorizations are also there, sir. Yes, we saw an example, DFIA, duty free import authorization, freely transferable. B, SION. What is SION, sir? Standard input output norm. Standard input output norm. SION. Why is this relevant, sir? I'll give you an example. What is the input for making shirts? Cloth, sir. What is the input for making knife? Steel, plastic, or it could be aluminium, plastic. Now, sir, what is this? So, if you are importing cloth, it will be mentioned in SION how many shirts should you get out of these meters, these many meters of cloth. If you are importing steel, it will be if you are importing steel for making knife, then it will be mentioned that if you are importing this much kg of steel, then these many knives, this should be the weight of knife. Oh, is it, sir? Yes. Everything is defined in SION, standard input output norm. Who fixes it? Fixed by norms committee. Norms committee. This is a separate norms committee in which functions with DGFT. Okay. C. Physical and deemed exports. What is physical export? What is deemed export, sir? Physical export is where the product is going outside India. Deemed export is where the product is not going outside India, but you are supplying to a person who is obligated to export, or supplying to United Nations, or supplying to projects of national importance. Such programs are also covered under the meaning of deemed export. Deemed export is much wider compared to deemed export under GST. So FTP deemed export is much wider. So what's the benefit, sir? Now, I'll just give you an example. Say suppose I have taken an advance authorization. I have imported cloth to make shirt. That shirt I can either export or I can do a deemed export. Oh, both are permissible, sir? Yes. Give hyphen under physical exports, comma, the goods are exported outside India. Full stop. Under deemed export, comma, the goods remain in India but enjoy various benefits. Full stop. Examples of deemed export is supply to advance authorization holders, comma, supply to UN bodies, comma, supply to projects of national importance. And there's one more category like international competitive bidding. I'll talk about it when we come to deemed export discussion. So basically, government wants to give the benefit to deemed exporters as well. So if you are a deemed exporter, you can get a advance authorization, you can get a EPCG. These are the benefits which are available to a deemed exporter. Plus they get some refunds as well. We will see that when we are discussing deemed export in detail. But both physical as well as deemed exports are considered for the purpose of meeting export obligation. So export obligation is not just physical exports. Export obligation can be met by doing deemed exports. That means for a deemed exports, you can take an advance authorization license. And when you supply to an advance authorization holder, who is someone else, that is also permitted as meeting export obligation. Okay. D. State trading enterprise. State trading enterprise. Give hyphen. They have certain privileges under FTP. They have certain privileges under FTP. Some products can be imported or exported only by state trading enterprise. This could be government or non-government. Mostly they are government, like Food Corporation of India. You can write an example. Food Corporation of India. Like some products can be imported or exported only by state trading enterprise. No one else can do it. Is it, sir? Yes. So what's the point in learning this? You'll come across various provisions where state trading enterprise would be mentioned. So the moment you see a state trading enterprise, foreign trade policy need to be very clear. Last terminology before we see the main part is value addition. Now what is value addition? Value addition. Now you think, what should be value addition? Export minus import or import minus export? It's FOB value slash FOR of exports. Sir, why are you writing FOB and FOR? Now, whenever you talk about physical export, we use free on board, which is the cost up to the ship. Thereafter, you add freight, you add insurance, you get the CIF, cost insurance freight. FOB is used for physical exports. For deemed exports, we use FOR, free on road or free on rail. We don't use X factory, sir. No. We use FOB or FOR, free on board for physical exports, free on road or rail for deemed exports. So FOB slash FOR of exports minus CIF of imports. Oh, for imports we use CIF, sir? Yes. I'm sure you would have learned this in your classes. See, whenever it comes to, this is southern part of India, whenever it comes to import, we always see the value here, that is CIF. Because FOB will be in US, you will add freight and insurance and reach CIF. And whenever you talk about exports, we check the value here because we have to check the value in India, na? So that's why you use FOB. So for imports, we use CIF. For exports, we use FOB. You understood the logic? Great. Now what should I divide it with? Divided by CIF of imports. This is how you get a percentage. Now, value addition in percentage form will be derived like this. But sir, if we want to just calculate value addition, then you just do this FOB or FOR, just do the numerator part. That's sufficient. I'll give you an example. Say suppose export FOB is $1150. CIF is $1,300. Import FOB $700, CIF $1,000. Now, how will you calculate value addition here? Let's see. Value addition equals to, for export you will use this, for import you will use this. $1150 minus $1,000. So here you will get your value addition divided by CIF value of import, that is $1,000. And if you multiply it with 100, because you'll have to do it to get a percentage. See, 150 divided by 1000 into 100 will come to 15% value addition. You can even check this. $1,000 is what you have spent as foreign exchange. 1,150 is what you have earned as foreign exchange. If you need a 15% value addition, then you will reach $1150. Understood? Okay. So, we have learned 5 terminologies. To sum up, first one, sir, we don't remember anything. First terminology was actual user condition. Only the person who has the authorization may use it. Sometimes some licenses will be subject to actual user condition. Then we spoke about physical export and deemed export. Then we spoke about SION, standard input output norm. Then we spoke about value addition. And finally, we spoke about one particular enterprise, state trading enterprise, which have certain privileges under FTP. Now, this important terms is just to get you a hang of everything. Will these terms be mentioned in our book as well? The answer is yes. PDF has it. All these details are there, even written. But just to get a hang of things, we need to know these basics. Okay. Now come to the PDF. Now let's read. So you can see the heading, Foreign Trade Policy 2023. Let's see. FTP is a set of guidelines and instructions which is issued by central government. Careful, foreign trade policy is not drafted by parliament, it is by central government, because parliament has delegated the entire work of foreign trade policy to central government. In matters related to import or export, that is basically foreign trade. The governing legislature concerning foreign trade is Foreign Trade Development and Regulation Act 1992. In exercise of the powers conferred under Foreign Trade Development and Regulation Act, central government announces foreign trade policy with certain underlined guidelines. FTP is formulated, controlled, supervised by TGFT. That's the most powerful body. Let's see some features. Exports are promoted through various promotional schemes. Advance authorization, DFIA, EPCG. There should be no taxes on export, and hence taxes are either exempted, you understand, duty exemption, adjusted, input tax credit, refunded, GST refund, duty drawback, on both output and input through duty exemption or duty refund. Export and import of goods could be free. Free here does not mean duty free. Be very careful. Free meaning without restrictions. That means you can import without restrictions. Or it could be restricted. For restricted category, you will read a authorization or a license. or prohibited? Prohibited. Can you import export? The answer is no. Some products are free but can be imported only by state trading enterprise. What is a state trading enterprise? You know it. Even capital goods can be imported at nil duty for the purpose of export under EPCG scheme. Exports and imports are free unless regulated. Let's see who administers it. DGFT issues authorization for import export. Authorization means a permission in terms of Foreign Trade Development and Regulation Act to import or export. It also grants IEC. What is IEC, sir? Importer Exporter Number. Basically, anyone who is doing import export should have a IEC. To importers and exporters, import and export without IEC is not permitted unless specifically exempted. DGFT may in public interest pass such order or grant such exemption, relaxation, relief. People, very special power. Can DGFT grant an exemption or relief if you have not met the authorization conditions? The answer is yes. Say suppose there was a value addition requirement of 15%, but you went and met 14%. Can DGFT grant your relief? The answer is yes. Exemptions, reliefs, industry-wide extensions, everything can be given by DGFT. Very powerful body. It will do it with the help of norms committee or policy relaxation committee, which help DGFT. Let's see. DGFT may in public interest pass such orders, grant such exemption, relaxation, relief as it may deem fit and proper on the ground of genuine hardship and adverse impact on trade to any person or class or category of persons from any provisions of FTP or any procedure. While granting such exemption, DGFT may impose certain conditions. After consulting with norms committee, they might fix that you have not done this, but make sure that you do this. For fixation of modification of product norms under all schemes. Say suppose the entire steel industry is not able to make what is fixed by norms committee. Everyone is facing an issue because DGFT and norms committee have not considered normal loss. Then in that case, everyone will apply. DGFT will grant a relief and they might also add some conditions. EPCG committee basically for capital goods and policy relaxation committee for any other issue. So norms committee for input output ratio, EPCG committee for capital goods and policy relaxation committee for anything else. Sir, what if I'm not satisfied with what they have done, what DGFT has done? I'm not satisfied with it. Personal hearing can be granted and you can present your case. Let's see. If an importer or exporter is aggrieved by the decision taken by PRC, who is PRC, sir? Give a hyphen or give a arrow. Policy Relaxation Committee. Or a decision or order passed by any authority in the DGFT, special request for personal hearing has to be made. DGFT may consider the request for relaxation after consulting concerned norms committee, EPCG committee or policy relaxation committee, and the decisions conveyed in pursuance to the personal hearing shall be final and binding. No appeals, sir. Government is committed to easy and speedy redressal of grievances of trade. There is also a settlement commission to settle the matters in case of default in export obligation. Obviously, this is the most common thing, that export obligations are not met. When you import without these duties, now you are confident that you will export. but with time things can change. Okay. Other authorities involved in FTP: CBIC, Reserve Bank of India, Foreign Exchange, State GST departments. Okay, let's see the contents. Sir, will we get any question on this? No. Contents, scope, all these are just to get into it. Thereafter we'll get into the schemes. That's when question and answer will start. At present our more focus is to get the basics right so that we can understand the balance. Contents: present FTP was announced on 1/4/2023, will continue to be operative unless specified or amended. Handbook of procedure, it's not there for you. But what is this handbook of procedure, sir? It contains all the procedural aspects to claim any advance authorization, any EPCG, any particular benefit under DFIA, whatever you need, all the process related thing. The procedure is there in handbook of procedure, not there for you. Some points are kept by ICA that we will discuss, which is part of our notes. And appendices, basically annexures, ayat niryat forms, import export forms, standard input output norms. Okay, what is ITC HS 2023? I'm sure you have come across this. This ITC is not input tax credit, Indian Trade Classification Harmonized System. Oh, classification of goods. Yes. Basically, HSN is what you are aware of, harmonized system of nomenclature. It's just classification. Here it's called as Indian Trade Classification Harmonized System. This has two schedules. Schedule 1 deals with import goods. Schedule 2 deals with export goods. Tell me one thing. Here will there be GST or basic custom duty rates mentioned in these schedules? No. Here regulations will be there. Restricted category, prohibited category, restricted authorization required, restricted actual user condition, restricted CON has to be met, free CON has to be met. All these will be mentioned in ITC-HS. Provides classification of import and export items. Schedule 1, import policy. ITC-HS 2023 describes rules and guidelines related to import policies, while Schedule 2, export policy, rules and guidelines related to export policies. Presently, most of the goods can be imported without any authorization. This happened in 1991, where Indian economy was liberalized. Schedule 2 contains very few products where export is prohibited or restricted. Excluding those items, export of all items is free. SCOMET list is also provided. Now, what is this SCOMET, sir? This is something new for us. Special chemical, organism, material, equipment, technology. Can you put it in simple terms, sir? Sure. There are some chemicals, some materials which have dual use, and one of the use might be for benefit, other use might be for destruction, like uranium, plutonium, which can be used to generate electricity plus also to make nuclear bombs. These are SCOMET products where there may be dual use. These are regulated. Obviously, if a product has dual use, should it be regulated? The answer is yes, it will be regulated. In fact, the paper which is used to make the notes which are used in India, should it be regulated? The answer is yes, because that particular paper can be misused to make fake notes. Dual use. Clear? Let's see SCOMET. It's given in the footnote. Special chemicals, organisms, materials, equipment, technologies. India is a signatory to International Convention on Disarmament and Non-Proliferation and is a member to major multilateral export control regimes. Resultantly, export of dual use items, including software and technologies having potential civilian and industrial application, as well as use in weapons of mass destruction, is regulated under FTP. It is either prohibited or permitted under authorization unless specifically exempted. SCOMAT list is our national export control list of dual use items, ammunitions, nuclear related items, including software and technology, and is aligned to a control list of all the multilateral export control regimes and conventions. It's not just India who has it. Most of the countries who are signatory to these agreements follow this strictly. Then FTP vis-a-vis other laws, we have already discussed it, but let's see what we had discussed and what is written here. FTP is closely linked with customs, GST law and excise/state laws in India. However, policy provisions per se do not override tax laws. The exemptions extended by FTP are given effect by issuing notifications under respective tax laws. Thus, actual benefit of exemption depends on the language of exemption notification. Okay. What's the scope of FTP? How does this entire thing work? Policy regulating import and export of goods or services. That's what it covers. Export promotion measures are covered. EPCG scheme is covered. EOU schemes are covered, deemed export schemes are covered, developing districts as export hubs, and other exemption schemes. It basically tries to promote cross-border trade. That's the basic objective, which is the coverage of FTP. Advance authorization. So we learned that the basic principle of advance authorization is that you import inputs without payment of custom duty and you have to meet some export obligations. That is the basic premise for advance authorization. Now let's understand it by way of a particular flow of diagram, and then we will see the points given in the notes. See, first a person has applied for advance authorization on 7/4/2024. Now once he applies, it will take some time. There might be some errors, all those corrections will be done, and thereafter finally he got the advance authorization on 19/5/2024. Once he gets the advance authorization, thereafter can he import? Yes, he can import inputs without payment of custom duty. Now the question is, what is the time which he gets? He gets 12 months plus one extension of additional 12 months can be seen. So there is a revalidation option. Meaning, sir, revalidation meaning, see, the validity of this expires in 12 months. Revalidation meaning extension. Revalidation of 12 months. Total 24 months. So the basic time limit is 12. Additional extension of 12 months can be taken. What all can you import? See, you have to import inputs which are physically incorporated in the product. That means those inputs form part of that particular product. Like for a knife, steel, shirt, cloth. For this pen, the aluminium which is used. All this has to form part. That input you can import. Plus it is subject to pre-import condition. What is pre-import, sir? You can't say that I already had aluminium, I have used this for export product. Now whatever I get, I will use it for something else. No. Pre-import condition, that means first import, then manufacture the export product using that input only. You can't vary it. So physically incorporated inputs, fuel, oil, catalyst is to speed up the process, that can be imported, and mandatory spares. Now mandatory spares, do you agree that mandatory spare is a finished goods? when I say mandatory spare is the finished goods, so government has kept a restriction that mandatory spare only up to 10% of the CIF value of the authorization. For example, say suppose authorization value is $1 lakh. How much of mandatory spares can you import using this license? It is $10,000. This will be the value of mandatory spares which you can import. This is the advance authorization permission which is given. Now, once you do this, are you required to meet something? Yes, you are required to meet export obligation in 90 days from the date of clearance of import goods. The moment you import, clock starts. 90 days you have to clear the goods, manufacture the finished goods and export the finished goods. Sir, any extension allowed? Export obligation period, there is no extension which is permitted. Plus you have to meet 15% value addition and also meet the quantity requirements as per SION. What is SION? Standard Input Output Norm. Okay, who can import? Manufacturer exporter and merchant exporter, which are supporting manufacturer. You understand merchant exporter? Merchant exporter is basically a trader who is a person who is registered with Export Promotion Council and is an expert in exports. So what he does is he finds a supporting manufacturer, imports the input, both the names will be written, and then export document also both the names will be written, both merchant exporter and supporting manufacturer's name. Remember, this merchant exporter can purchase goods at 0.1% that we learned in refund chapter under GST. Okay. Can we sell these inputs or finished goods in domestic market? What do you think? Can we sell these inputs domestic market? Now, first of all, the license is subject to actual user condition. That means license you cannot transfer it to anyone else. Only you can import inputs. Second is inputs can never be sold. It is subject to actual user condition. That means the raw material, the cloth which you have imported can never be sold. But sir, what about the finished goods? Finished goods, yes, after meeting export obligation. Yeah, but you have to make sure that if you have taken input tax credit, then you manufacture dutiable goods from it and then you sell it in domestic area with GST. That's what you have to make sure. Can we buy domestically, sir? What do you want to buy domestically? Sir, instead of importing these inputs, can we buy it domestically? The answer is yes, it is allowed. Now try to recall. In fact, this will result in two advantages. One, you will be able to save foreign currency. You don't have to incur foreign currency. That is the advantage to India. Second, the person who is supplying you, he will get the benefit of deemed export. You learned this in GST also. Supply to a advance authorization holder is a deemed export. You have a choice. Either the supplier can claim refund or the recipient can claim refund. So both the options are available. But sir, to do this, is there some documentation? Yes, you have to go to the regional authority and get a advance release order or invalidation letter. Once you have these two documents in place, then in that case you can import domestically. Sir, what's the difference between advance release order and invalidation letter? It depends on, see, invalidation letter and advance release order na. So basically these are documents giving two different circumstances. If both are advance authorization holders, then there is one document. If you want to claim a refund of taxes which you have paid, that is deemed export under GST, then there is another document. Otherwise, the nature remains same. One of these documents will be sufficient to buy domestically. What do you buy domestically? Inputs can be bought domestically using advance release order or invalidation letter. Can you get an advance authorization for annual requirement? Because say suppose once you take it for 500 units, then again you take it for 500 units. Can I take an annual advance authorization for 4000 units? The answer is yes. that is permitted, but it is permitted only if the product is a Sion product, meaning Sion is mentioned for this. Sir, that is obvious, na? Without Sion, how will you get advance authorization? No, advance authorization, you can go to the norms committee and get a Sion fixed for your product. That is called as ad hoc norm. That is permitted. Then you can do a self-declaration or self-ratification also with a chartered engineer certificate about an additional product or additional input which you use. Additional input is not by quantity terms. Saying aluminium 10 units are used, I can't say I need 11 units. That's not additional input. Additional input means aluminium is mentioned, I want it for rubber also. That is also permitted. It's called a self-ratification. Self-ratification, you are self-certifying. Basically, you are self-asking for an additional input, and a certificate has to be accompanied from a chartered engineer. That's the requirement when it comes to getting advance authorization. But annual license is given only if you have a Sion product for which Sion is mentioned in the law. How much advance authorization for annual requirement can I take, sir? 300% or FOB or FOR or 1 crore rupees, whichever is higher. Now you tell me one thing. Why FOB/FOR? For physical exports, you consider FOB. For deemed exports, you consider FOR. That means you can take advance authorization not just if you are an exporter, but also if you are a deemed exporter. Can you give us an example, sir? I purchase aluminium, I export this particular product. I am involved in physical exports because I send it to US. Second example, I manufacture this product which is an input for some other person, and I am selling to an advance authorization holder. I am an advance authorization holder. I am selling to another advance authorization holder. This is a case of deemed export. Or I am selling this to a EOU. Again, it is a deemed export. That is also permitted. So very wide ambit. Plus you can supply stores to foreign going vessel or aircraft. That will also qualify to be export. Oh, so for that also we can get advance authorization, sir? Yes, you can get it for that as well. Now, we'll read all these provisions and you'll also come across some additional provisions, like say suppose when it is for a deemed export transaction of project of national importance like mega power project, etc. Then in that case, it will not just be 12 months validity, but it will be much higher. It will be coterminous with the project. So say suppose project execution takes 3 years, then the advance authorization will also be valid for 3 years. Such additional points you will come across while we read it from the notes. But what I suggest you is, you should give a heading in your notebook, advance authorization, and you should make a note of this entire thing. You should pause the video and write it. This will help you one day before the exam when you quickly want to revise advance authorization. Okay, I hope you have paused the video and you have written this entire thing. Now let's read the provision. Let's see. Advance authorization scheme. Tell me, is this a duty exemption or duty remission scheme? This is a duty exemption scheme because you are not required to pay at all. Let's see. Benefit under this scheme is that inputs which are used in export product can be imported without payment of custom duty. Inputs which are used for export product, you don't have to pay custom duty. Goods imported are exempt from basic custom duty, additional custom duty. Now this you will change it to social welfare surcharge, anti-dumping duty, countervailing duty on subsidized goods, safeguard duty, transition product specific safeguard duty. Sir, what is this? This is under section 8C of Custom Tariff Act, which is for China specifically, People's Republic of China. For some products, directly we can levy safeguard duty, which is specific safeguard duty, and that will apply only for products coming from China. There is a specific section. It's not there in your syllabus in customs, but here they have mentioned it, so you should know about it. IGST compensation cess. Now, these protective duties, when I say protective duty, what do I mean? I mean this green color. 1, 2, safeguard duty and specific safeguard duty. So these are exempted for every kind of advance authorization except specified deemed exports. And there are 2 deemed exports which are specified. One, when you are supplying capital goods to a EPCG holder. Second, when you are supplying to United Nations for their operations. These 2 categories of deemed export, both are deemed export, but these 2 categories of deemed export do not get the benefit of protective duties. Other duties are exempted for everyone, but protective duty benefit is not available for those 2 categories of deemed export. Normally, everything is exempted. 2 deemed exports, you will not get protective duty exemptions. Let's see that in the footnote. However, specified deemed export are not exempted from payment of anti-dumping duty, countervailing duty, safeguard duty, transitional product specific safeguard duty. Now, which are these specified deemed exports? Let's see. Deemed exports specified for this purpose are supply of capital goods against EPCG authorization and supply of goods to UN or international organization for their official use or supplied to projects financed by them. So for these 2 categories, you will not get the benefit of protective duties. Okay. Validity. What is the validity of this advance authorization? Validity period in 2 situations is as follows. First, validity period for advance authorization shall be 12 months from the date of issue of authorization. This means that import under the authorization must be made within this period. You are aware of that. Revalidation for another period of 12 months can be allowed only once. Application will be made online. What is revalidation? Extension. In FTP, we call it as revalidation. Validity of advance authorization for supplies under deemed export. So that means you have taken advance authorization because you want to do a deemed export. Shall be coterminous with the contracted duration of project execution or 12 months from the date of issue, whichever is later. If you have a contract for 3 years or 12 months, whichever is later, you get more time in deemed export. Who is eligible? Either it can be a manufacturer exporter or it can be a merchant exporter, but merchant exporter has to be tied with a supporting manufacturer because merchant exporter is a trader. For pharmaceutical products manufactured through non-infringing process. What is this non-infringing process? That means I have a right over a particular product and I only can manufacture it, but I have given a subcontracting. In such cases, when I give it for subcontracting, he cannot sell it to someone else. Whatever I have given it to him, he has to give it to me because I have the right over that product. In such cases, only a manufacturer exporter will get advance authorization. Let's read it again. For pharmaceutical products manufactured through non-infringing process, that means not violating or infringing someone else, right, shall be issued only to the manufacturer exporter, not to the merchant exporter. Sir, can we subcontract? No. No, you can't. An exporter who holds authorized economic operator license, only when you hold a authorized economic operator license, only then you will get this. Sir, what is this authorized economic operator? This is given by CBIC. Now, you had seen this even in customs. Authorized economic operators get a deferred payment option. They can pay custom duty on deferred payment basis. Whatever they have cleared between 1st to 15th of the month, they can pay by 16th. Whatever they have cleared from 16th to end of month, they can pay by 1st of next month. And if it is 16th to 31st March, then you have to pay the duties by 31st March. But you get some buffer, that is called as deferred payment, and that benefit is for authorized public sector units and authorized economic operators. But sir, who are these authorized economic operators? These are considered as trusted partners of customs because they do import and export on a very regular basis and they have very stringent safety standards. So what is the benefit to them, sir? If you get a AEO from CBIC gives AEO. If you get a AEO certification from CBIC, then you will get quick clearance of your consignments, not just in India, but also outside India, where India has mutual recognition agreement. So you will get speedy clearance from India, you will get speedy clearance even in US. Your customer will also get speedy clearance because this was packed by you and you exercise high safety standards. Obviously, this is given to regular importer exporters who are considered as trusted partners by CBIC. Now, sir, say suppose I don't have this authorized economic operator license, then you should be a status holder. That means you are an exporter who has met certain amount of exports. Then, and you should have applied for AEO, but that application is pending. Then you can take advance authorization. Anyone else, sir? Anyone else will not be eligible for this. Then what do we do, sir? DFIA, duty free import authorization. First export, then get the license to import duty free. Or you can also go for duty remission schemes, that is refund of taxes. Let's see. An exporter who holds authorized economic operator certificate under common accreditation program of CBIC is eligible to opt for this scheme. A status holder who is a manufacturer cum actual user holds valid 2-star or above status and has already submitted its application for grant of AEO to CBIC on its portal is also eligible. However, DGFT may deny authorization to a 2-star and above status holder on risk management principles. This scheme is also not available for specified export product and specified inputs. Which are specified, sir? Not there in syllabus. Okay. It is issued for physical exports, including export to SEZ, deemed export, intermediate supply. Intermediate supply, basically you are supplying to an exporter semi-finished goods. Supply of stores on foreign going vessel or aircraft subject to conditions that specified SION in respect of items supplied. SION, standard input output norm. Okay, let's read about AEO. What is AEO, sir? Authorized economic operator. Under authorized economic operator program, a business entity engaged in international trade is granted AEO status if it is approved by customs as compliant with supply chain security standards. Who sets up all these standards, sir? World Custom Organization. Such entities are considered as trusted trade partners of Indian customs. AEO status holders get extensive benefit like preferential custom treatment in terms of reduced examination and faster processing and clearance of cargo, deferred payment of duty, which you learned in customs, direct port delivery or entry enhanced border clearance in mutual recognition agreement partner countries. Oh, there also you'll get the benefits, sir. Yes. Say suppose India and US have a mutual recognition agreement, get the benefits there as well. Greater facilitation and self-certification. AEO program is based on WCO. What is WCO, sir? World Custom Organization. Safe framework of standards. Okay. What is the export obligation period? I am sure you know this. 90 days from the date of clearance, no extension. Let's see. Export obligation means obligation to export product or products covered by authorization in terms of quantity, value or both, as may be prescribed or specified by regional or competent authority. The export obligation period of advance authorization issued shall be 90 days from the date of clearance of import consignment and no extension will be allowed. Obviously, it is subject to actual user condition and no transfer of imported raw material for any purpose including job work shall be permitted. So you cannot transfer these raw materials ever. Items which can be imported duty free, inputs which are physically incorporated in the export product. Obviously normal allowance for wastage is allowed, you know that. Fuel, oil, energy, catalyst to increase the process speed which is consumed or utilized. Mandatory spares up to 10% of CIF value of authorization which are required to be exported or supplied with the resultant product. Be very careful. Can you just import mandatory spares for 100% of the authorization value? 10%. So if your authorization is for $1 lakh, 10% of that you can import mandatory spares. Balance should be inputs or fuel. Basis of issuance of authorization. It is issued for inputs in relation to resultant product on the following basis. First basis you already know, Sion. Second is self-declaration. Obviously, not everyone is permitted self-declaration. As this scheme is only for authorized economic operators, government allows self-declaration in this. Applicant specific prior fixation of norms by norms committee. Oh, we can also apply, sir. This is called as ad hoc norms. Ad hoc norms meaning prior to the import, you go to the norms committee, get a norm fixed for your product because there might be some different product which you are manufacturing which may need something else as well. So you can go to the norms committee. On the basis of self-ratification scheme. What is self-ratification scheme? You can get a certificate from chartered engineer of an additional input which you need to add. Additional input does not mean additional in quantity terms. Additional input means additional new input. Let's see this from the footnote and mark this important. This can come as a case study question. Case study. Let's see. Where there is no Sion / no valid ad hoc norm for export product, or where Sion has been notified but exporter intends to use additional input. People, what is this additional input? Some other new input, not quantity wise same. In the manufacturing process, eligible exporter can apply for an advance authorization under this scheme on self-declaration or self-ratification basis. The expression additional input refers not to additionality in terms of quantity or value of input specified in the norm, but another additional input. Good example given by government. Say if input specified in the norm is x1 and x2, then input y will be additional input. RA, who is RA? Regional authority. Regional authority may issue advance authorization, and such cases need not be referred to the norms committee for ratification of norms because it's self-ratification. Application under this scheme shall be made along with certificate from a chartered engineer. So self-ratification is always subject to certificate from the chartered engineer. Okay. Let's see some other features of this advance authorization scheme. Pre-import condition. Meaning, sir, first you import, then you make the finished goods from that input only, not what you have in stock. Imported inputs are subject to pre-import condition and they should be physically incorporated in the export product. Even in case of local procurement, even if you are domestically procuring it under invalidation or ARO. What is ARO, sir? Advance release order. The inputs shall be procured prior to manufacture of export item and shall be physically incorporated in the product. You have to take the invalidation letter before manufacture and you should get those inputs. Okay, then you have actual user condition. Obviously, actual user condition is applicable. It will not be transferable even after completion of export obligation. See, license though you can never transfer. But products, sir, let's see. Products manufactured from such duty-free inputs can be transferred once export obligation is met. If you have claimed CENVAT, what is CENVAT, sir? CENVAT, Central Value Added Tax, Central Excise. See, here you get input tax credit in GST. There you used to get CENVAT credit. That means ITC of Central Excise. If CENVAT or input tax credit facility on inputs has been availed for exported product, even after completion of export obligation, the goods imported against such authorization shall be utilized only for manufacture of dutiable goods. You can't sell those inputs, whether within the same factory or outside. Outside does not mean job work. Outside means supporting manufacturer. Waste or scrap. What do you think? Waste or scrap. Waste or scrap, will that also be subject to export obligation? 15% value addition. You can't sell it unless export obligation is completed. Waste or scrap arising out of manufacturing product can be disposed of on payment of applicable duty even before fulfillment of export obligation. And waste we can sell as waste, sir? Yeah. And whatever is the GST rate on that product, just pay that. Okay. What's the minimum value addition? 15%. But for some sector where India is a leader, government has kept higher percentages. That higher percentage is not there in syllabus, but institute has provided what are those products. Gems and jewelry, tea, spices. For this, it can be more than 15%. Plus, for petroleum products, it can be less than 15% because petroleum product na thin margin. And when we export to Nepal, Bhutan, we have a very thin margin. So there, even if 15% is not met, that's fine. Let's see. Advance authorization necessitates export with minimum value addition of 15%. Do you know how is it calculated? FOB/FOR value of export minus CIF value of import. And if you want a percentage, then divided by CIF value of import. This is how you get a value addition percentage. Now, so 15% minimum value addition. Let's see the footnote. Separate rate of minimum value addition is prescribed for gems and jewelry, tea, spices. However, in case of specified products like petroleum products, value addition could be less than 15%. Okay, this again mark it as important for case study. Let me explain it to you. See, can it happen that you have sent some product free of cost to your supplier outside India? I'll give you an example. I am a manufacturer of shirt, so I had to import cloth, but I needed a specific color and the color for that was not available with him. So I sent the dye to him. You understand dye? I sent the dye free of cost to my supplier outside India. He colored it and then sent me the cloth. Now the value of dye, will it be added to this value addition calculation? The answer is yes, it will be added here. It will also be added here. It will also obviously be added here. So that notional value of dye which I have sent free of cost will be added not just in CIF value of import but also in FOB value of export, because I get that product and then I am going to export it. So in both that will be added to compute value addition. But tell me one thing, when you export it, will you get that notional value from your recipient? Realization of foreign exchange will be based on FOB value of export and not based on that notional additional value. That is also mentioned in the law. Let's have a look. If some items are supplied free of cost by the foreign buyer, then its notional value of free of cost input is added in CIF value of import and FOB value of export for the purpose of value addition. This is only for value addition calculation. However, realization of export proceeds will be equivalent to amount excluding notional value of inputs. Okay. Then what is invalidation letter, sir? What is advance release order? Very simple, people. Say suppose both are advance authorization holders, then one to another you will have to take a invalidation letter, because both are advance authorization holders. Supplier is also advance authorization holder, recipient is also advance authorization holder. Second is advance release order. Advance release order is if you want to claim a refund. Who wants to claim a refund? Your supplier, the person who is supplying you. Let me ask you one basic question. Think. If you have advance authorization, can you purchase domestically? The answer is yes. If you want to purchase domestically, you have to get an invalidation letter or advance release order. Invalidation letter when both are advance authorization holders, and advance release order when domestic supplier wants to claim a refund. Because for a domestic supplier who is supplying to me, I am an advance authorization holder. When he is supplying to me, he can claim a GST refund plus other benefits are also available. Let's see. Invalidation letter. Who will issue? Regional authority shall issue a invalidation letter when domestic supplier intends to obtain duty-free material for input through advance authorization for supplying resultant product to other advance authorization DFIA or EPCG holder. I am an advance authorization holder. I am supplying to the next person who is a advance authorization holder. And the other person could be DFIA or EPCG holder as well. Advance release order. Regional authority shall issue an advance release order if domestic supplier intends to seek refund of duties exempted through deemed export mechanism. If the other person wants to claim that, then advance release order. Okay. Now this you'll mark for 5-mark theory. Annual advance authorization. You can take an annual license, sir. Yes, you can take an annual license. Advance authorization for annual requirement shall only be issued for items which are mentioned in SION. Oh, self-declaration, self-ratification, ad hoc norms not allowed. And it shall not be available in case of ad hoc norms under self-declared authorizations where SION does not exist. Advance authorization for annual requirement shall also not be available in respect of SION where any input is specifically notified. Government can say, for these inputs I will not give you annual license. For these inputs you take per consignment license. But sir, for which inputs? That is not there in your syllabus. Exporters having past export performance at least in last 2 years shall be entitled for annual requirement. At least last 2 years you should have export performance. What is export performance, sir? You should have exports. You have done exports. And how much? CIF value of import shall be 300% of FOB value of physical export or FOR value of deemed export in preceding financial year, or 1 crore, whichever is higher. Okay. Sir, can we also claim drawback along with this? I'll give you a good example for this. Aluminium I imported. I wanted to make this pen. I imported aluminium under advance authorization. So I have not paid duty. Can I claim drawback? No, I have not paid any duty only. Rubber I imported on payment of duty. Now I am exporting this. Can I claim drawback of duty paid on rubber? Let's see. Admissibility of drawback. Duty drawback as per rate determined and fixed by custom authority is available for duty paid imported or indigenous inputs. Indigenous, local, domestic. Used in the export product. For this purpose, applicant shall indicate clearly details of duty paid on inputs in the application for advance authorization. You'll have to mention that on this you have paid this much duty, then you'll get a drawback. Okay. Can an audit or special audit be done? This is a new point. Audit or special audit can be done. Let's see. Concerned norms committee. What do they want to check? Whether you have used SION correctly, whether actual user condition is met, pre-import condition has been met, are you using old stock to make export product? Let's see. Concerned norms committee may conduct audit of the manufacturer. Concerned norm committee may also initiate special audit considering the nature and complexity of the case and revenue of government. If he is of the opinion that at any stage scrutiny, inquiry, investigation that the norm has not been claimed correctly or excess benefit has been availed. Special audit can be conducted even if the manufacturer has already been audited before. But sir, who will conduct special audit? That is not given in your syllabus, so please don't worry about it. Okay, let's see some common provision. Very simple. These common provision in fact are very simple. Common of what, sir? Advance authorization and DFIA. What is DFIA, sir? We forgot. Advance authorization is import, then export. DFIA is export, get the license, then import duty free. But there are some points which are common in both. Like, sir, accounting of inputs. You have to keep the data of inputs which you have used. Sometimes there may be some inputs which have dual use. Need to take care of that. Let's see. Where Sion permits use of either a generic input or an alternative input. So this can also be a case where you can make this same product using two types of inputs. Both are mentioned in Sion, you are using one of them. The name and description of input used or to be used in the authorization must match with the name endorsed in the shipping bill. Same name should be there. Huh? You can use it steel, you can use aluminium. Now if you have used aluminium, both your import document and export document should mention aluminium. At the time of discharge of export obligation. What is EODC, sir? Export Obligation Discharge Certificate. For all these licenses where you are claiming a duty exemption, once you complete it, you have to take this. Or at the time of redemption, regional authority shall allow only those inputs which have been specifically indicated in the shipping bill together with quantity. The above provisions will also be applicable for supplies to SEZ and supplies under deemed export, obviously. Okay, now you only think this is very easy. I mean, even if this was not there, now you would have applied the same sense. Tell me, import export of prohibited product, will it be permitted? No. Prohibited? No, it will not be allowed unless specifically exempted. Restricted product, only with license. STE, what is STE, sir? We don't know STE. You write here, state trading enterprise. Those products which only a state trading enterprise can deal with. Can you import or export that product? Only with permission of state trading enterprise, or if a specific permission has been given to you. Oh, is it, sir? Let's see. This is what is mentioned. Prohibited items. No export or import shall be allowed under advance authorization or DFIA if it is prohibited. Export of prohibited item may be allowed under advance authorization provided it is separately notified. Obviously not, people. Prohibited, not allowed unless it is specifically allowed. Okay, state trading enterprise. What is state trading enterprise? Let's see. Come to the footnote. ITCHS. Now what is ITCHS, sir? We'll go mad remembering the full forms. It's not that difficult. Indian Trade Classification Harmonized System specifies against certain goods that they can be imported or exported only through STE notified by DGFT. State trading enterprises are government or non-government? Majorly they are government enterprises, including marketing boards which deal with goods for export or import. However, DGFT has the discretion to issue authorization to other entities to import or export goods that are notified for exclusive trading through STE. Some of the STEs are Food Corporation of India, ONGC, National Fertilizers Limited, Indian Rare Earth Limited, National Dairy Board, National Agriculture Cooperative Marketing Federation of India, State cooperative marketing boards. Do we have to remember these names, sir? No. Okay. Items reserved for STE can be imported against advance authorization, cannot be imported against advance authorization or DFIA, obviously, na? However, those items can be procured from STE. Yeah, you can purchase it from STE against ARO or invalidation letter. You very well know advance release order or invalidation letter for domestic procurements. Items reserved for export by STE can be exported under advance authorization only after obtaining no objection certificate from the concerned STE. Restricted items are allowed under advance authorization DFIA unless specifically disallowed. Because what is restricted item? Where a license is required. And what is authorization? It's a license. Export of restricted or SCOMET items shall be subject to all the conditionalities or requirements of the export authorization. Can you domestically source inputs? Yes. Advance authorization or DFIA can procure inputs from indigenous supplier or state trading enterprise, EOU, EHTP, BTP, STP in lieu of direct imports. Such procurements will be against advance release order or invalidation letter, which we have already read. Validity of these two shall be coterminous with the validity of main advance authorization. Okay. Currency. Which currency should you get money in? Export proceeds. Freely convertible foreign currency. Sir, what is freely convertible foreign currency? These are not restricted by government to convert in INR. Easily convertible to INR. That's freely convertible foreign currency. Because a person in India as per FEMA can't hold foreign currency more than a limit. So the moment you get that foreign currency, it gets converted, goes into foreign exchange reserves. Now, export proceeds shall be realized in freely convertible currency or INR except where otherwise specified. You can get in INR, sir. Yes. For some countries, government has allowed INR as well. Like for Nepal, Bhutan, we can get export proceeds in INR. Re-import of exported goods under duty exemption or remission schemes. What do you think? You exported those goods. Now you are re-importing those. Let's see. Goods exported under advance authorization or DFIA may be re-imported in same or substantially same form subject to specified condition. Sir, will duty apply on this? Here we are not talking about duty, but yes, to the extent of benefit claim, duty will be applicable. If you have not claimed any benefit, then the duty will be zero. But sir, here I claim benefit, na? Yes, so duty will be applicable. Clear? So this was about advance authorization. To sum up, what can you do? You can import inputs without payment of custom duty, do the export obligation, meet the export obligation within 90 days of import, 15% value addition, meet the CON. You can get it for physical exports as well as deemed exports. You can import inputs, fuel, mandatory spares up to 10%. Who all can do it? Manufacturer or merchant exporter tied with a supporting manufacturer, but they should be authorized economic operators or status holder 2-star and above. We are yet to learn status holder, we'll learn it, but government gives status rating 1 to 5 star, so you should be 2-star and above, and you should have applied for authorized economic operator from CBIC. Can you get an annual license? Yes, 300% of FOB or FOR or rupees 1 crore, whichever is higher. Annual license will be allowed only if there is a CON mentioned, otherwise you will not get it. Plus resultant product, once you meet the export obligation, you can sell it. Before that, you cannot sell it. Prohibited goods, no, you cannot get it. Restricted, yes, you can get it. if a item or a particular product is only to be traded by state trading enterprise, then you have to obtain a no objection certificate from them for exporting, and import you cannot do, you have to buy it from them against advance release order or invalidation letter, which is true for any purchase which you make domestically against advance authorization. This was a small sum up for advance authorization. Now let's see an illustration to close this advance authorization. Flintex manufactures goods using imported inputs and supplies the same under UN program. Payment for such supply is received in free foreign exchange. Can Flintex seek advance authorization for supply to UN? Yes, because deemed export advance authorization is allowed for making deemed export. So you can take an advance authorization for making deemed export. Okay. XYZ Limited has imported inputs without payment of duty against advance authorization. CIF value is 10 lakh. Inputs are processed and the final product is exported. The exports made by XYZ are subject to general rate of value addition prescribed under advance authorization scheme. No other input was used in processing. What should be the minimum FOB value for export? Oh, very easy. 10 lakh plus 15% value addition. What should be the minimum FOB? 11.5 lakh. A has used some duty paid inputs for export product. Oh. However, for rest, he has applied for advance authorization. Can he do so? Oh, can there be a situation where some products are with advance authorization and some products are duty paid? The answer is yes. And for those which are duty paid, you can claim duty drawback. Is that also permissible, sir? Yes. There'll be a brand rate because of which you will have to apply. You'll have to submit the documents. Brand rate meaning, sir, a rate which you will say that this much is the input which I have, on which I have paid duty, and this is what should be given to me. I'll give you an example. Say suppose you have paid 10,000 rupees as custom duty. All others was covered under advance authorization, so you did not pay anything. Now your FOB value is 10 lakh for export. So how much refund do you want from government? How much duty drawback do you want? 10,000, sir. You will have to give them a percentage which is called as brand rate. So 10,000 divided by 10 lakh into 100. So what you want is, this will be 1%. So 10 lakh into 1%. So what you want as a rate is 1%. Clear? Okay. This is what is written here. Yes, A can do so. He can also claim a drawback and he will have to apply for a all industry rate or brand rate? Brand rate. Specific brand rate because he needs a specific rate, because not everything is duty paid. Only some portion is duty paid. Go through all these answers. Now let's talk about DFIA. DFIA is very simple after you have completed advance authorization, because entire concept remains same. It's just that first you will export here and only thereafter you will get the license. Once you get the license, you can import without payment of custom duty. But be very careful. Here the benefit which you get is only for basic custom duty and not for anything else. In advance authorization, you get the benefit for all duties, but here it is restricted to basic custom duty. Advance authorization is subject to actual user condition, but this is freely transferable. You can transfer it, you can sell these licenses to anyone else. That means it will not be given for those products where SION mentions actual user condition. Say suppose for a particular input actual user condition is mentioned, then government will not give you DFIA for such inputs. Value addition 15% in advance authorization, 20% here. Otherwise 12 months is the time where first you first file an application that I will export. This is step 1. And then within 12 months complete export, and then DFIA will be issued, and the validity of this DFIA will be 12 months. That means use it within 12 months, or if you transfer, the other person also has to use it before 12 months gets expired. Clear? Okay, anything else in this? No, it's a very small topic. Let's have a look. Let's see. What's the benefit? The provisions of advance authorization scheme are applicable in case of DFIA. Same. However, these authorizations shall be issued only for products which have SION notified. Oh, self-declaration, self-ratification, nothing. DFIA shall be issued to allow duty-free import of inputs as well as oil and catalyst which is consumed / utilized in the process of production of export product. Import of tire is not allowed. Goods are exempted only from basic custom duty. Can we claim drawback, sir? Yes, obviously. Drawback as per rates determined and fixed under customs shall be available for duty paid inputs, which I showed you even in advance authorization. Eligibility. DFIA shall be issued on post-export basis for which SION has been notified. Application is to be filed with concerned regional authority before starting export under DFIA. Merchant exporter shall be required to mention the name and address of supporting manufacturer of the export product. That's obvious, huh? You have to mention. What is the validity of DFIA? First, export should be completed within 12 months from the date of filing online application and generation of file number. The moment you file application, within 12 months you have to complete export. DFIA shall be valid for 12 months from the date of its issue. Once DFIA is issued, you have to use it within 12 months. No further revalidation shall be granted. Advance authorization had a revalidation of 12 months. Here, nothing. Separate DFIA will be issued for each SION. No DFIA for actual user condition input. If for some input SION says subject to actual user condition, can you get DFIA for that? No, because DFIA itself is freely transferable. No DFIA shall be issued for an input which is subject to pre-import condition or where SION prescribes actual user condition. Pre-import, sir, that means it should be first you import that, then export product should contain that only, or certain other specified inputs with pre-import condition. Transferability, yes, regional authority will issue transferable DFIA. And what is the minimum value addition? 20%. Now I leave it to your option. You can write this here, and if you even want to create a differentiation between DFIA and advance authorization, that also you can do. 15% versus 20%, revalidation versus no revalidation, inputs without custom duty versus post export basis. DFIA is post export basis. All duties versus BCD. These are the core differences between advance authorization and DFIA. Go through this again. Now let's talk about RoDTEP, remission of duties and taxes on export product. Now we already understood that there are some unrefunded taxes like central excise, VAT, CST, which is even today applicable on some products. Government wants to give that back in the form of remission of duties and taxes on export product. Now, the moment you export a product, this will be based on a percentage of FOB. It can be quantity based as well. There can be a cap as well to this. But that quantity based one or percentage, that will be given in the question, or it will be specified clearly that you don't have to see it, because you don't have product specific rates or product specific ways. I just told you how it is computed. Plus, getting foreign exchange is very much necessary to claim RoDTEP. These are in the form of e-scripts. Can you sell these e-scripts? The answer is yes. Can you use these scripts to pay IGST? No. Social welfare surcharge? No. Then only basic custom duty. Is it, sir? Only basic custom duty. Plus, this is not allowed for various categories. Now, EOU does not get it, SEZ does not get it, EHTP does not get it, STP does not get it, BTP Biotechnology Park, no, Electronic Hardware Technology Park, no, deemed exports, no, export of product in same form, there is no value addition which you have done, that means you wouldn't have used anything, you will not get. Transshipment cases where it is just touching in India and going to some other country, no, you will not get. A port where facility of electronic filing of bill of entry is not there, no. Then sir, whom do we give it? Very small chunk of exporters who will be eligible, because most of the exporters are in EOU and SEZ. So technically, government has given this benefit only to a very small set of exporters, not to everyone. Let's have a look. Remission of duties and taxes on exported products. The objective of the scheme is to refund the currently unrefunded duties and taxes at central and state level borne on the exported product, including prior stage accumulation. You would have taken transportation service. That transporter would have purchased petrol and diesel. That petrol and diesel would have central excise and VAT. That also government wants to give it back. Sir, government will do all this calculation. They have fixed percentage rates on goods or services used for production of exported product, or indirect taxes in respect of distribution of exported product. Under the scheme, rebate would be granted to eligible exporters at notified rate, which is a percentage of FOB, with a value cap per unit for exported product. There might be a per unit cap wherever required. For certain export items, fixed quantum of rebate per unit may also be notified. 10 rupees per unit rebate. Export 100, get 1000 rupees. E-script. The rebate shall be subject to receipt of sale proceeds within the time limit allowed in FEMA. If forex is not received, amount of rebate will be refundable along with interest. I mean, you'll have to pay back to government. Rebate would be credited in the form of transferable electronic skips to e-credit ledger under customs. You have read this. E-credit ledger, which can be transferred from one person to another and can be used only to pay basic custom duty. Rebate shall not be available in respect of duties and taxes already exempted, remitted or credited. Let's see ineligible category. I mean, after reading this, you'll be like, who is getting it, sir? Same or substantially same form, you'll not get. Transshipment, you'll not get. Export where there is a minimum export price or export duty. This is set up by government only when government wants to discourage exports. So government has said that on this product, export duty will be applicable. That means government wants to discourage exports. Where government wants to discourage exports, do you think government will give you RoDTEP? Say suppose government has levied export duty or minimum export price on tomatoes or onions. Then in that case, do you think you'll get this benefit? No, because government wants to stop exports of that. This is a measure to control exports so that product don't go outside India. Products which are restricted or prohibited, deemed export. Otherwise, everyone will keep claiming. I will sell to a person who has advance authorization. He will sell to a person who has EPCG. EPCG person will sell to a EOU. You will sell to a SEZ. SEZ will export. 5 times we will claim RoDTEP. Or supply of products from DTA to SEZ or free trade warehousing zone. Earlier, SEZs were known as free trade warehousing zone. Products manufactured by EHTP, EOU, SEZ, free trade zone, export processing unit. Products manufactured or exported in discharge of export obligation under advance authorization, DFIA, EPCG. You have taken advance authorization. For that now you are exporting, not eligible. Now these two categories, other than SEZ, these two categories, government is contemplating in future they might give RoDTEP for 6 and 7. They might give. So as it is they might give, no need to remember. Because at present it is not there. Product manufactured or exported availing the benefit of 32/1997. What is this, sir? You can import for job work and then you can export. So while you import for job work, no custom duty. In that case also RoDTEP is not given. Job work and re-export of goods supplied. Export for which electronic documentation in IceGate has not been generated, or exports with non-EDI ports. That means where the facility of online filing is not there, like land custom stations, Nepal border, Bhutan border, there. Exports which have been taken into use after manufacture. Second hand goods you want RoDTEP. Not get it. Clear? Go through this once. Now let's talk about status holder. So you get status recognition based on the amount of exports which you have done. 1 star is given for $3 million. But sir, is this $3 million for 1 year? No. Current year plus 3 preceding financial years. And is there a benefit if you become a status holder, sir? Yes, obviously. You get SION form norms committee on priority basis. Then exemption from filing bank guarantees. You don't have to file. You don't have to compulsorily negotiate the documents from bank. That is not required. If you are 2 star or more, then you can set up a export warehouse. If you are 3 star, 4 star, 5 star, then you can self-certify your product that it has originated from India, because certificate of origin is required, and to take that certificate of origin now you have to go to the authorities. But if you are a 3, 4, 5 star, then you don't have to go to any authority. You can self-certify that it is originating from India, origin of those goods in India. Then export promotion material can be sent outside India subject to specified limits. Limits are not there for your syllabus. Then you also get a benefit where special training etc. will be conducted for 2 star and above. Skill development basically. So 1 star $3 million, 2 star $15 million, 3 star $50 million, 4 star 200 and 5 star 800. But remember, current plus 3 preceding financial years. Now plus it's very important that, sir, say suppose in first year only I meet $3 million, can I apply for status holder? The answer is no. You need to have export performance for 3 preceding financial years. Only then you can apply for status holder. Before that you can't. So at least 3 years you have export performance, then you can apply. Plus for 1 star some industries get double weightage, like agri units, like ISO or BIS approved products, northeastern states including Jammu and Kashmir and Sikkim and Ladakh. And if you are a MSME, micro, small, medium enterprise, these get double weightage for 1 star, up to 1 star. Meaning, say suppose you have exported for $1 million, then this will be regarded as $2 million. Say suppose you have exported for $1.5 million, then it will be regarded as $3 million. These 4 get that particular advantage as well. Basically, this is to encourage these industries that they get status holder of 1 star and they enjoy some benefits. After 1 star, 2, 3, 4, 5 is no double weightage. You'll have to achieve that much of export, only then this will be given. All these calculations are in dollars. So if it is FOB, no problem, because FOB will automatically be in dollars, physical exports. What about deemed exports, FOR, which is in INR? Now how will you convert this? You'll have to convert this to dollar based on CBIC rate as on 1st April. Whatever is the notified rate by CBIC as on 1st April, for the entire financial year, you will convert that into dollars. Clear with this? Great. Sir, what about supplies which are made for specific export obligation meeting? Will that also be counted in this $3 million, $15 million, etc.? The answer is yes. SCOMET products, special chemicals, yes, that will also be counted. Let me show it to you. Status holders are business leaders who have excelled in international trade and have successfully contributed to countries' foreign trade. They are expected not only to contribute towards Indian exports but also provide guidance and handholding to new entrepreneurs. All exporters of goods and services and technology having IEC shall be eligible for recognition as status holder. Status holders depend on export performance. The applicant shall be categorized as a status holder upon achieving export performance during current and preceding 3 years. For gems and jewelry it is different, but institute has not kept it for your syllabus. That is given in the footnote. 1 star, $3 million, and be careful, FOB or FOR. 2 star, $15 million. You understand $3 million, na? 30 lakh into whatever is the dollar rate. 30 lakh, 3 million, 30 lakh into dollar rate. 30 lakh into 82. Do the math. Same way I calculated for $800 million. That is 5-star rating. But it's not just current year, it's current year plus 3 preceding financial years. Additional points which merit consideration for computing export performance. You can get a 5-mark theory question on this. Export performance counted on FOB basis based on free leaf convertible foreign currency or INR. Deemed export FOR value of export in INR shall be converted to US dollars at the exchange rate notified by CBIC on 1st April of each year. For granting status, export performance is necessary in all 3 preceding financial years. So first year you can't apply. For calculating export performance for 1 star, export by IEC holders under following categories will have double weightage. Let's see who gets double weightage. Important, huh? MSME, ISO BIS, units located in northeastern states, fruits and vegetables. Export on re-export basis shall not be counted. Obviously, people, re-export. You first exported, that is already counted. Then it came back for repair. Then now you are re-exporting. Again you will consider it. once. Export of items under authorization or is comet items would be included in computing this. Export performance is not transferable among IEC holders. You can't say that my sister concern also wants 4-star. I have done more than 5-star, so let me transfer some export performance. Not permitted. What is the privileges which you get? Again 5 marks. Both import and export on self-declaration. Fixation of CON on priority basis by norms committee. You are aware of norms committee. Exemption for compulsory negotiation of documents. Exemption from furnishing bank guarantees for FTP schemes. 2-star house gets export warehouse. 2-star and above. Manufacturers who are status holders 3, 4, 5 will be enabled for self-certify and circle originating from India. So you will get this benefit. It's a major benefit. You can self-certify. You will save a lot of fees from government for their manufactured product as per Industrial Entrepreneurship Memorandum. This is a document entered between all these persons, or industry license or letter of intent with a view to qualify for preferential treatment in specified agreements. Let's read what is all three. IEM. Industrial undertaking exempted from requirement of industrial license under the Industry Development and Regulation Act 1951 are required to file information of setting up of industries known as Industrial Entrepreneurship Memorandum. Industrial license, legal authorization to work or operate a industry. Letter of intent refers to the document issued by the exporter to indicate their intention to export goods and services. It's the initial communication. LOI serves as an initial communication between the exporter and buyer, giving the terms of the contract. Okay. So all these, what they can do, sir? Self-certify that it is originating from India. Status holder shall be entitled to export freely exportable items free of cost as export promotion subject to specified annual limits. What is this? Samples. Oh, we can send samples, sir. And samples obviously you send free of cost. Status holders will be entitled to preferential treatment and priority in handling their consignments. Skilling and mentorship obligation of status holders. That is, status holders other than 1-star are being made partners in providing mentoring and training in international trade to specified number of trainees each year based on the status which they have achieved. Now let's see the illustration. 2 exporters, Red Sky and Black Knight, have achieved status of 1-star in the current financial year. Both have been regularly exporting goods every year. What would be the minimum export performance of the 2 exporters to achieve such status? Both exporters want to establish export warehouse in accordance with the applicable guidelines. What should be their export turnover to enable them to establish warehouse? What will be this thing? So obviously you will have to give the data of how much is required and who can set up a export warehouse? Only 2-star and above. So what are they? They are 1-star house. So they would have achieved $3 million, but to reach export warehouse setting up capabilities, they will have to export $15 million. Only then they will be allowed to set up a export warehouse. Clear? Now let's talk about EPCG license. So basic premise of a EPCG license is that you can import capital goods without payment of custom duty. So you don't have to pay custom duty. But obviously it comes with certain obligations. To understand that obligation, let's have a look at a small diagram. Now, say suppose you have imported a machine, the value of which is 100 crores. And the custom duty applicable was 30%, that is 30 crores. So the duty which you have saved is 30 crores. Now, as government has allowed you this benefit, obviously you will have to give something in return, and that something in return is specific export obligation and average export obligation. Now, how much of export should I do, sir? Specific export obligation will be 6 times the duty saved. So the moment I multiply 6 times 30 crores, it comes to 180 crores. And this export obligation has to be met in 6 years. Now, how do we calculate this? Let me show you an example. See, my export turnover from same or similar product for last 3 years was 80 crore, 90 crore, 100 crore. So the average comes to 90 crores. That means average export obligation which I should meet for next 6 years is 90 crores. That means for next 6 years I have to keep doing 90 crore minimum, because that's the average even before purchase of this machine. So that much I should maintain from this product. Plus, as I have imported a new machine, I have to also meet specific export obligation of 180 crores. Now, how is this calculated? Now, if my export in 23-24 is 95 crore, so 90 is average export obligation which I am anyways required to meet, and 5 crore will go to specific export obligation. So whatever is over and above the average export obligation, that will be counted for specific export obligation, and that's how you need to meet the criteria of 180 crores, because you have to do a specific export obligation of 180 crores. This has to be met in 6 years. Sir, what if I don't meet? Penal provisions, pay duty, pay interest, and there is one more thing which we will learn in penal provisions. Now, let's see the steps of how EPCG works. First, you apply for EPCG license. Second, you get the license. Then within 24 months, you are required to import capital goods. What kind of capital goods can you import without payment of duty? You can import machine, CKD or SKD form. What is CKD, sir? Completely knocked down or semi knocked down. Basically in complete parts or in lesser number of parts. Computer systems, software, spares, catalyst, molds, dies, jigs and fixtures, refactories. These are all used in factories. These things you can import without payment of custom duty. You don't have to pay a single rupee. And whatever you have not paid will be considered as duty saved. And that duty saved into 6 times. That is your specific export obligation. Sir, I will try to act smart. What I will do is IGST and compensation cess I will pay off. Because anyways IGST I will get input tax credit. That will not be considered as duty saved then. If you are trying to think on these lines, let me tell you, there is a provision in EPCG saying that if you pay IGST and compensation cess and claim input tax credit, then it is as good as duty saved. That means if you end up paying IGST and compensation cess and you have taken ITC on that, it will not give you any benefit. It will be regarded as duty saved. You will have to do whatever you had to already do. Is it, sir? Yes. But if you don't take input tax, sir, if you don't take input tax, then it becomes your cost. Then it is not duty saved. You'll get the benefit. Okay. Now, what all should I meet, sir? You have to meet two things. Average export obligation, which is the average of preceding 3 financial years, that we saw 90 crores in our example, and specific export obligation, which is 6 times the duty saved in 6 years. But specific export obligation will be over and above average. So whatever is over and above average, that will be considered. Now, if IGST and cess is paid, then it is not counted as duty saved if ITC is not taken. If you don't take ITC, then it is not considered as duty saved. Sir, can I purchase from domestic market? Yes, you can do a domestic procurement, something called as ARO. You remember advance release order or invalidation letter. By these two documents, you can do a domestic procurement. In domestic procurement, you get some discount. That means you get to meet export obligation 4.5 times. 6 times the duty saved into 75%. So you have to meet 25% less, 25% discount if you procure domestically, the machine is purchased domestically. Can I do that, sir? Yes, obviously. Another benefit is for fast track companies. Say suppose you have met 75% of the export obligation in 3 years or less. Then government says you are a fast track company, balance 25% will be waived. Sir, anyways I would have got it. But the best part is now you don't have to do any reporting. You will get your export obligation discharge certificate. You are out of custom department and DGFT departments. Otherwise you were within their cage. Now you are out of it. And sir, export obligation can be met by what all? You can do a physical export. You can do a deemed export. You can also send ITA1 products for free foreign exchange. What is ITA1? Information Technology Agreement. This is an agreement which all countries agreed to encourage information technology products and keep the duties less. So if you are manufacturing these products and selling these products and getting foreign exchange, then it is regarded as meeting export obligation, because then the product which you are supplying will not be imported and India will save foreign exchange. So government is giving you this benefit. So to sum up, what is the benefit in EPCG? EPCG, the benefit which you get is you can import capital goods without payment of custom duty. What all you can import, you know that. You have to meet two things: average export obligation, average of last 3 years. Sir, if I have not been producing any such product, then average is 0. Then everything will be considered as specific export obligation. You have to meet specific export obligation, which is 6 times the duty saved in 6 years. Do you get some benefit as a domestic procurement? Yes, 25% less. If you are a fast track company, 25% will be waived off and export obligation will consider everything. Sir, if I am a EPCG holder, will I get RoDTEP? The answer is no, you will not get RoDTEP. Okay. What I request you to do is, you will copy this entire thing in your notebook by pausing the video and then we will read it. So this is one part and this is the second part. So you pause the video and write it so that it becomes easier one day before the exam. Okay. I hope you have completed this. Now let's have a look at EPCG scheme. Let's see the benefit. EPCG permits exporters to import capital goods for pre-production, production and post-production. Oh, you can use it for all the three: pre-production, post-production and during production. But will it be always subject to actual user condition? Yes, obviously. That means you cannot sell it until and unless you meet the export obligation, and you have to keep it with you at 0 custom duty, or procure them indigenously without duty in prescribed manner, indigenously within India. In return, exporter is under the obligation to fulfill export obligation. IGST and compensation cess is also exempted. What is the export obligation? 6 times the duty taxes cess saved in 6 years. Authorization validity 24 months. Revalidation not permitted. And you know this. In case of IGST and compensation cess, if it is paid in cash on import of EPCG, the incidence of said IGST and cess would not be taken for net duty saved if ITC is not availed. That means if you have taken ITC, it is as good as duty saved. Restricted import / export. If something is restricted, you will have to take a license. If your export product is restricted, you will have to take a license. Import of items which are restricted shall be permitted only under EPCG scheme after requisite approval. Similarly, if the goods proposed to be exported are restricted for export, then EPCG authorization shall be issued only after approval, that is export authorization. Can you take it from the domestic market? Yes, you can procure it by invalidation letter or advance release order. Okay, let's see the conditions. Specific export obligation 6 times the duty saved in 6 years. Sir, but if I procure domestically, notional duty saved. That's given in the footnote. Let's see. In case of direct import, it will be actual duty saved. In case of domestic sourcing, it will be notional custom duty saved on FOR value. I am sure you know FOB and FOR. Okay. Average export obligation is over and above average level of export in preceding 3 licensing years for same or similar products within the overall export obligation period. In case of indigenous sourcing, 25% less. Shipments under advance authorization, DFIA, drawback scheme, RoDTEP, RoSCTL, not there in syllabus. Remission of state and central taxes and levies would also be counted for fulfillment of export obligation. That means you can take advance authorization license, you can take EPCG license, then do one export. It will be counted as export obligation for advance authorization as well as EPCG. Export from DTA unit shall only be counted for calculation or fulfillment of average export obligation or export obligation. Obviously, this scheme is taken only by someone from DTA. It can be fulfilled by selling ITA1 products provided you get foreign exchange. Physical and specified deemed export is also considered in export obligation. Is it subject to actual user condition? Yes, till export obligation is completed and you get a export obligation discharge certificate. After that, sir, after that you can sell capital goods. Who is eligible? Manufacturer with or without supporting manufacturer, merchant tied to a supporting manufacturer, service provider including common service provider. Say suppose in our area there are 10 IT firms, information technology firms, and they want a common capital goods. Can they get it? Yes, as a common service provider they can import this and everyone will have to meet specific export obligation as agreed by them. What is eligible? Capital goods including CKD and SKD, completely knocked down, semi knocked down. Computer softwares and softwares which are part of capital goods being imported. Be very careful, not just computer system, it should be part of the capital goods which you are importing. Spares, molds, dies, jigs, fixtures, refractories. Catalyst is to increase the speed of the process, including initial charge and one subsequent charge. 2 catalysts will be allowed. If you are a fast track company, 75% of specific export obligation, 75% of 6 times will be 4.5 times. If you have met that in half or less than half of the export obligation period, then remaining export obligation shall be condoned and authorization will be redeemed. You'll get the export obligation discharge certificate. Okay, let's see an illustration. XP Private Limited, a manufacturer, wants to import capital goods in CKD form from foreign country and assemble the same in India. The import of capital goods is under notified project import, fine. The capital goods will be used for pre-production process, fine. Final product would be supplied to SEZ, okay. Deemed export is also allowed, physical export is also allowed. Wishes to sell the capital goods imported as soon as the production process starts. See, pre-production machine you can bring, CKD form you can bring, supply to SEZ permitted. Wants to sell it as the production starts, not permitted. That's what we will have to tell them. Seeks your advice whether it can avail EPCG benefit. You can avail, but you can't sell this because it is subject to actual user condition till you meet the export obligation and get the export obligation discharge certificate. You cannot sell the capital goods. So you'll have to frame your answer for each of these points. 1. Pre-production allowed, CKD allowed, SEZ supply deemed export allowed, selling not allowed. Clear? Now let's talk about EOU, EHTP, STP, BTP, various schemes launched by government at different points of time. EOU, Export Oriented Unit, EHTP, Electronic Hardware Technology Park, STP, Software Technology Parks, BTP, Biotechnology Parks. To all this, government gave one major benefit, and that benefit was you can import inputs and capital goods without payment of custom duty. And in return, you need to meet the export obligations. You need to export almost everything except for permissible limit, which is allowed to be sold in DTA. That permissible limit has not been kept in your syllabus as of now. Now, trading units are not allowed. Plus, there are two committees, Unit Approval Committee, Board of Approval. Unit Approval Committee basically gives approvals to EOUs and Board of Approval gives it to others. Minimum investment for this is 1 crore, but for some sectors, the Unit of Approval Committee can give a relaxation. So that's permitted. Plus, agriculture, horticulture, all these sectors, that 1 crore limit also does not apply. Why will you set it up, sir? Major benefit, import inputs and capital goods without payment of custom duty. Second benefit, restricted products, self-certification, you can get it. Third benefit, you can store foreign currency in EEFC account, exchange earner foreign currency account. Fourth benefit, you purchase locally, that GST you don't have to pay. If the supplier agrees, supplier will claim a refund because it's a deemed export. DTA to EOU, it's a deemed export. Either the supplier can claim a refund or recipient, whoever has borne the tax. Fifth obligation which is there on you is you have to be net foreign exchange earner in a block of 5 years, because in the beginning when you set up the EOU, you'll do a lot of expenditure. So you'll spend a lot of foreign currency. Then you will start exporting and earn foreign exchange. Net amount should be positive in 5 years block. So every 5 years block, you should have been net positive foreign exchange earner. Then SCOMET products are allowed. State trading restrictions are not applicable. Inter-unit transfer, like from one EOU to another EOU, can you send the goods? Yes, it is in bond movement. Development commissioner, there are development commissioners appointed for every EOU, EHTP, STP. So they will permit it. Then GST will be charged, GST and compensation cess, but basic custom duty which you enjoyed a exemption, that will not apply. Sir, what if I convert or exit? If you exit from the EOU, you have to pay all the benefits which you have claimed for the stock which is there with you. Conversion both ways permitted, subject to certain conditions, but those conditions have not been kept for your syllabus. So DTA unit can convert to EOU, EOU unit can convert into DTA. Now, All these points which I mentioned, let me show these points to you in a diagram form or a chart form, and then we will read it from the book. That chart form, just mentioning it will help you to basically one day before the exam, when you are near your exam, you can easily recall these things. Let's have a look. EOU, EHTP, BTP, STP. One general point is import of inputs without payment of custom duty, capital goods without payment of custom duty. You have to export other than permissible DTA sales. Trading units not permitted, has to be a manufacturer or service provider in software technology park. Minimum investment 1 lakh. Board of approval gives it for other than EOU, and unit approval committee gives it for EOU. You have to be a positive NFE. Net foreign exchange should be positive in a block of 5 years. They can avail ITC. DTA to EOU is a deemed export. They can store their money in EEFC account, exchange earner foreign currency account. Export and import, all products permitted. Export promotion material can be sent outside India, samples, no problem at all. 9 months they can realize their export proceeds, that's the time limit allowed to them. Capital goods and second-hand capital goods, they can self-certify and get it. SCOMET products, they don't face any issue. Spares, again self-certification, not a problem. And 100% FDI is also allowed. SCOMET are restricted categories which we saw earlier. They have an exemption from industrial license. They are not regulated by straight trading enterprise regulations where only straight trading can import some goods. They get a reimbursement of CST and central excise exemption. The inputs and capital goods are subject to actual user condition. EOU has to use it. But sir, inter-unit, is it allowed? Yes. Development Commissioner's approval is required and you have to pay GST and compensation cess. But when you exit, you have to pay all the taxes and duties and benefits which you have claimed. Because you would have claimed central excise exemption, you would have claimed a reimbursement of CST, you would have claimed GST benefits, you would have claimed custom benefits. Everything will have to be paid back on the stock, obviously, not on whatever you have already exported. Conversion, both ways it's allowed. DTA to EOU or EOU to SEZ. The conditions are not kept in your syllabus. So a very small part of EOU has been kept in your syllabus. Majorly these may be tested in MCQs. So just be careful about that. Now, what I would recommend is, let's first read the provision and thereafter you can come back to this particular slide and you can decide as to how much you want to write and if you want to add something else to this. Let's see. Units under EOU scheme, EHTP, STP, BTP export their entire production except permissible sale in DTA. They can import inputs and capital goods without custom duty. Units undertaking to export their entire production may set up under these schemes for manufacture of goods including repair, remaking, reconditioning, re-engineering, rendering of service, development of software, agriculture, agro-processing, aquaculture, fish, animal husbandry, biotechnology, floriculture, horticulture, everything is covered. Trading units are not covered under the scheme. Just for trading, you can't set up a EOU. Otherwise, all merchant exporters will do this only. Application for setting EOU shall be considered by Unit Approval Committee or Board of Approval. And when they say EOU here, this is the language used in MAT, but EOUs will include all those EHTP, STP, BTP. Only projects having minimum investment of 1 crore in plant and machinery shall be considered for EOU. However, this shall not apply to existing units in EHTP, STP, BTP and EOUs in handicraft, agriculture, floriculture, aquaculture, animal husbandry. No need to satisfy 1 crore. Board of approval may allow establishment and EOU also in lower than 1 crore. Net foreign exchange earning in a block of 5 years. Plus, for some sectors, they may also provide higher value addition. Meaning, you understand value addition? Very well, sir. We have seen it a number of times till now. Now let's see the other entitlements. You get an exemption from industrial license for items reserved for micro and small industries. So EOUs can manufacture that, sir. Yes, because EOUs are not going to sell in the domestic market. They are going to export it. Export proceeds will be realized in 9 months. They can retain 100% of their export earnings in EFC account. Units will not be required to furnish bank guarantee for job work into DTA. 100% FDI will be allowed. Let's see some other benefits and objectives. Objective, promote export and enhance foreign exchange earnings, attract investment for export production. EOU, EHTP, STP units may export all kinds except those which are prohibited. Oh, restricted also, sir? Yeah. An EOU, EHTP unit may import or procure from DTA or bonded warehouse in DTA or international exhibition held in India, all type of goods which is not prohibited without payment of any of these duties. So any goods imported, any goods exported, obviously except prohibited goods. However, procurement of goods covered under GST from DTA will be only on payment of GST. You know this. Supply to EOU is considered as a deemed export. It's not a zero rated supply. Units can also import goods, including capital goods required for approved activities on self-certification basis. You can self-certify, obviously, yes. It is always subject to actual user condition and should be utilized only for export production. State trading regime not applicable for EOU except for specified products. Obviously, for them it does not apply because their aim is not to sell in India. Their aim is to export. Supplies from DTA to EOU will enjoy deemed export benefits. You have seen this in GST. You will see this again in FTP. DTA suppliers shall be eligible for relevant entitlements under deemed export, including refund of GST. Plus, when DTA is supplying to EOU, that is also fulfillment of export obligation. Is it, sir? Yes. Okay. In addition, you get 2 benefits, though you don't read Central Excise and CST, but Institute has kept this. They can get a reimbursement of central sales tax on goods manufactured in India, basically petrol, diesel, all these, because other than that there's no CST. Wherever applicable, simple interest of 6% per annum in case there is a delay in CST refund if it is not settled within 30 days from complete application. You remember this 6%, which is constant. Wherever government has to give you a refund within a specified time and it doesn't, same interest applies. In GST it was 60 days, in customs 3 months, CST 30 days. Exemption from central excise, again petrol, diesel. Duty on goods falling in 4th schedule of Central Excise Act procured from DTA for manufacture of goods in India. Inter-unit transfer on payment of applicable GST and compensation cess with prior approval from Domestic Development Commissioner of the transferor and transferee units, plus from the custom authorities. But that process is not there for you. Where are all these processes mentioned, sir? Handbook of procedures. Goods supplied by one unit to another unit will be treated as imported goods for second unit for payment of duty on DTA sale by second unit. Now, I sell it to another EOU. EOU again selling it to DTA, they will have to pay import duty. They will have to pay import duty because from one EOU to another EOU, for the other EOU, it's a import. Exit, yes, exit can be taken, but you'll have to pay excise, custom duties, GST, and follow all the processes given in the industrial policy at that point of time. If you have not achieved obligations, NFE, net foreign exchange earned, should be positive in a block of 5 years. It shall also be liable to penalty. Conversion. Existing DTI units may also apply for conversion into EOU. Existing EHTP or STP units may also convert to EOU and vice versa. Oh, allowed, sir. Yeah. In such cases, units will avail exemption in duties and taxes as applicable. Both ways allowed, not an issue. Is it, sir? Yeah. So this was about EOU scheme. Now you can take a call on writing this entire thing in your books. Now let's talk about deemed exports. So we have been hearing about deemed export throughout these FTP lecture. But now is the time to understand what are the categories of deemed export. Mark it as a 5-mark theory question. It has been asked even earlier for 5 marks. So be very careful. They'll directly ask you write about deemed export. Pure theory question. Plain. Now, deemed export, 3 categories. One is you are supplying to someone who is obligated to export. For example, when you supply to EOU, they are obligated to export. When you supply to advance authorization holder, they are obligated to export. When you supply to EPCG holder, they are obligated to export. This is one category. Second category is where there is a project of national importance. Third category is projects where international competitive bidding is done. These are the 3 categories of EOU. All the 3 deemed export categories get various benefits, like you can claim a drawback. Whatever custom duty you have paid on purchases, that can be claimed as a drawback. Second, you can take an advance authorization license, EPCG license, DFIA license if you are going to sell to a person who is under these categories. That means if I am selling to an advance authorization holder, can I take advance authorization for myself? The answer is yes. If I am selling it to a person who is a EPCG holder, can I take EPCG for myself? The answer is yes. So deemed exporter, first he can claim drawback. Second, he can also get these licenses. Third is terminal excise duty, additional excise duty which is applicable. That excise duty refund also can be claimed, like for petrol, diesel, that is also eligible. It could be through himself, that is he is the main contractor, or deemed exporter can also be done with a subcontractor subject to certain limitations. Because when you are supplying for mega power projects, now obviously there will be subcontractor that will also be covered under deemed export. Both will enjoy, but the contract should have names of both. There are some criterias. Once you meet that, both will be eligible for the benefits. Let's have a look at deemed exports. Deemed export refers to those transactions in which goods supplied do not leave country and payment for such supplies is received either in INR or in free foreign exchange. Supply of goods as specified in FTP shall be regarded as deemed export provided goods are manufactured in India. Here remember one thing, in GST there are only 4 categories of deemed export, but this is wider. In GST 4 categories is supply to EOU, EHTP etc., supply against advance authorization, supply against EPCG license, supply of gold against advance authorization, bank and PSU. That's it. Here it is wider. Let's see the categories and see the types. Broadly classified into 3. Supply to domestic entities who can import their requirement duty free or reduced rate. Advance authorization, EPCG holder, DFIA holder. Projects which involve international competitive bidding, where persons from outside India are also participating in the bids. In such cases, even the Indian domestic bidder will claim a bid or put a bid exclusive of taxes, because the person outside India will also bid exclusive of taxes. Infrastructure projects of national importance. Let's see. Supply by manufacturer, supply by main or subcontractor. Mainly big projects will have this, smaller supplies will have this. Supply of goods against advance authorization, annual advance authorization, DFIA, EOU, EHTP, EPCG authorization. Main or subcontractor. Basically these two happen with main or subcontractor. Supply of goods to project or turnkey contracts financed by multilateral or bilateral agencies notified by Department of Economic Affairs, which has international competitive bidding. Second, supply of goods to any project for any purpose where import is permitted as zero duty provided supply is made against international competitive bidding. I can give you an example also of a recent transaction. So say suppose India wants to buy 200 guns. Those 200 guns, a France person will participate in this bidding, plus HAL from India may also participate, or some other entity in India may also participate. So for these guns, basic custom duty will be exempted, zero. Not just for import, but even the raw material which is going to be used in this, that also can be imported duty free by Indian domestic manufacturers, so that Indian domestic manufacturers can give a bid which is competitive to the person who is to the bid which is being given from the persons outside India. Supply of goods to mega power projects, supply of goods to UN or international organization for their official use. You have heard this. Supply of goods to nuclear projects, again it could be through national or international competitive bidding. You understand, national, only Indian players will participate in the bidding. International, there might be foreign players as well. What are the benefits? You can take all this. If you are a deemed exporter, you can take all this. Then deemed export drawback. Oh, you get a drawback also, sir? Yes, if you have paid a basic custom duty, that also you can claim. Then you have refund of terminal excise duty on specified excise goods, petrol, diesel, excise duty, that also can be claimed. Supply of goods will be eligible for refund of terminal excise duty provided recipient does not avail SENVAT credit. Obviously, he should not claim a benefit of the taxes which he had paid on purchase as SENVAT credit and adjust it against output. That should not be done. Then you will get a refund of that duty. But central excise you don't study because it is applicable only for specific products. Okay. Common conditions for deemed export benefits. First, all supplies should be made directly to the entities listed in the point of categories of deemed export. You should directly supply to UN. But sir, if there is a subcontractor, we'll come to it. That's also given. Third party supply shall not be eligible for benefit. In all cases, supply shall be made directly to the designated projects, agencies, units, advance authorization or EPCG holder. Subcontractors may, subcontractor allowed, but his name should be there. However, make supplies to main contractor instead of supplying directly to designated products. Payments in such cases shall be made to subcontractor by the main contractor and not by the project authority. Supply of domestically manufactured goods by an Indian subcontractor to any Indian or foreign main contractor directly at the designated project shall also be eligible for deemed export benefit. I told you. Main contractor will also get the benefit, subcontractor will also get the benefit. Both the names should be written in the contract. But sir, what about someone who is supplying to the subcontractor? That chain is not allowed. Have a look at these provisions. Now we come to the fag end. I know it's more of a theory thing. So here in the fag end of this particular FTP topic, you need to be careful about knowing what these are, and some specific points just mark it so that one day before the exam you just see those markings and you can go for your exam. Some points I'll make you mark important for 2 mark or 3 mark. Just be careful on those points. Now first let's talk about trade facilitation and ease of doing business. See, government wants to ease the process of import and export, and that's why they have set up a national committee on trade facilitation. Plus, let me also tell you that India has signed trade facilitation agreement. The moment we become part of the trade facilitation agreement, it is our duty that we will act as a facilitator of export or import. We will encourage it, we will not add barriers to it, we will encourage it. That's the role of National Trade Facilitation National Committee. Now, what does this National Committee do? It tries to reduce the transaction cost and time. Second, release time of the cargo is reduced. Third, to bring a paperless environment which is already there in FTP as well as customs. Transparent and predictable legal regime. This is something which they aim for, but predictable taxes, that should be the aim. And last, improved investment climate through infrastructure. So for this, what has this National Committee for Trade Facilitation, what have they done? Free passage will be provided to export consignment, and they will not seize it unless it is an exceptional case. This was there even in the previous FTP. Single window clearance, that means you don't have to run from one department to another. Niryat Bandhu scheme for mentoring new ones. You understand Niryat. Ayat means import, Niryat means export. So for new exporters, training will be given. Online portals where you can read everything, plus you will get a registration cum membership certificate, because without this you can't apply for any authorization. This is mandatory, registration cum membership certificate. And these points will become easy because you already know a lot of schemes and you already know what all schemes are there. Registration certificate, e-certificate of origin, quality control and trade dispute resolution. A number of IT initiatives have been taken so that everything can become paperless and contactless. 24/7 helpline facility, And finally, a large number of steps have been taken by Custom Department as well. As I told you, Custom Department already paperless. Let's see it in the footnote. 24/7 custom clearance, single window interference with under customs, e-sanchit, e-storage, computer handling of indirect tax documents, compliance information portal, which gives all the details at one place. These are the steps already taken in customs. This you will mark important for 2 marks. Towns of export excellence. What does government want to do? Government will give a target to a particular town that meet this much of export, and if you meet this much of export, we will give you target benefits. This is like production linked incentive schemes, like that scheme. Like government encourages manufacturing by giving PLI schemes, production linked incentives, that you come manufacture in India, do this, make in India, you'll get this much money from us. Same principle government wants to apply for towns of export excellence. So they'll give a target. If you achieve that target, you'll get cash back. Let's see this. Selected towns which are contributing handsomely to India's exports by producing goods of specified amount may be granted recognition as towns of export excellence. They will be provided targeted support and infrastructure development to maximize their export competitiveness and enable them to move up the value chain and also tap new markets by granting specified privileges. They could say that Gujarat, this area, do this much, we'll provide you this much. Do this much, we'll do this. Other initiatives like status holder and authorized economic operator, we have already discussed in detail. Now let's talk about provisions relating to general provisions relating to import, export and other miscellaneous provisions. We'll start with other miscellaneous provisions, then we'll enter into import, then we'll enter into export, and that would be the end. 3 mark to 5 mark theory. This is completely new compared to previous FTP. Government wants to develop districts as export hub. Let me give you an example. In JK Shah classes, we have a batch of 100. We want everyone to clear. So what we start doing is, we divide that 100 in groups of 10, and 10 professors are given a task to manage those 10 students and help them to accelerate their studies. Will the results be much better? Yes. Same way, what government is doing is, instead of focusing on entire India, government wants to focus on each district. And the moment you focus on each district, the performance of each district will grow. Automatically, the performance of India as an exporter will also grow. Like, what are they doing for this, sir? So, the district collector will be responsible to encourage certain specific products which are most famous and most sold and most manufactured in that area. Jammu and Kashmir, Kesar. Any other part of India, a particular carpet. Other regions, there might be some other handicraft or artifact. We'll try to encourage that and help them set up an export business. By doing this, entire district will get developed. And if all the districts start getting developed like this, automatically the exports will go up. Let's read it. Every district has products and services which are being exported and can be further promoted with new products or services to increase production, grow export, generate economic activity, achieve the goal of Atmanirbhar Bharat. Atmanirbhar Bharat, self-sufficient. Vocal for local and make for India. Make in India. Products or services will be given GI tags. What is GI, sir? Geographical indicators. What is geographical indicators? There are some things which are valued if it is from that particular place. So they'll be given a GI tag saying that Kesar, Jammu and Kashmir, this is the Kesar from J&K, this is others. Agriculture clusters. Punjab, very famous for rice. Toy clusters with export potential in each district have been identified, and institutional mechanism in the form of district export promotion committee will be set up at each district level to provide support for export promotion and address bottlenecks for export growth. Bottlenecks, what is stopping them from export? A district export action plan may be prepared for each district. 2 or 3 high potential products from district may be prioritized, and a comprehensive plan for export growth may be prepared and implemented. Who will do this, sir? District Export Promotion Committee. DGFT and regional authorities will be engaging with all relevant state and central agencies to take forward this initiative to each district. This is a new thing which has come up. Okay. Quality complaints and trade disputes. I mean, you can ignore this as well. What is this quality complaints? So, government is trying to set up certain dispute resolution forums where, say, suppose a person outside India who has bought a product from India has some complaints regarding that product, then he can approach these dispute forums. Plus, these dispute forums will also take care that same problem is not repeated, because India's name should not be affected. Let's have a look. In case of import export, owner is liable to state the value, etc. In case of export, certification regarding to quality and specification of goods, services, technology being in accordance with the terms of export contract is also required. Necessary action is prescribed against erring exporters or importers, those who are cheating their customers, under Foreign Trade Development and Regulation Act as amended and under Foreign Trade Regulation Rules 1993. Further, a mechanism is laid to resolve complaints and trade disputes between foreign buyer suppliers and Indian exporters/importers in respect of quality of goods, service, technology supplied, or unethical commercial deals, including non-supply or partial supply. For this, what will we do? Committee on Quality Complaints and Trade Disputes. This is the forum. This will be the complaint forum. Committee on Quality Complaints and Trade Disputes will be responsible for inquiring and investigating for all this. It will take effective steps to stop those erring exporters and importers. Okay. Now let's enter into general provisions which are both related to import and export. Import and export is not allowed unless you have a IEC. IEC is PAN based. I mean, it is equivalent to PAN. Whatever is your PAN, that will be the IEC, but you will have to apply it on DGFT portal online. Once you apply it, you will have to every year report the changes. If there is no change, then also you will have to revalidate it. If you don't revalidate, then it will lapse, and then again you will have to revalidate. Only then it will become operative. Let's see. A person can undertake export or import activity only after obtaining a IEC, unless specifically exempted. It is a 10 character alphanumeric number allotted to the entity. It is same number as PAN but issued separately. Online application is to be filed. Some categories are excluded. IEC have to be electronically updated every year even if there is no changes. Failing which it will be deactivated till updation. Once you update it again it will be active. Okay, this is easy. Mandatory documents. What do you think are mandatory in export cases? See, first you need to have a bill of lading, airway bill, lorry receipt. How are you sending the goods? Commercial invoice come packing list. What is there? What is the value? What is the quantity? Shipping bill which you file to the custom authorities. Now think from import angle. Same bill of lading, commercial invoice, but instead of shipping bill you will have bill of entry. Okay, can there be some additional documents which the officer can ask? Obviously, in some specific cases there might be requirement of additional documents which may be asked. This you will mark it as important for 5 marks. Again, new penal provision, and this is denied entity list. This is new. Denied entity list. Now, say suppose I have taken an advance authorization and I have not met the export obligation. Now, if I have not met the export obligation, then the question arises is whether I'll have to pay the duties. Yes. Whether I have to pay interest. Yes. Whether penalty will apply. Yes. Plus, in addition to that, one more new thing has come. Denied entity list. I might be put at denied entity list and then I will not be allowed to take further authorizations or further licenses until and unless I make good the crime or the fault or the default is made good. Until and unless that is done, I will not be allowed to import export. So this is something which is new, can be asked directly as a theory question. Let's have a look. Penal action. In following situations, a person shall be liable to penal action under Foreign Trade Development and Regulation Act and the orders made thereunder or in FTP or any other law. One is authorization holder. If he violates condition of authorization, fails to fulfill export obligation, fails to deposit requisite amount. Any information furnished by the applicant is found to be untrue or incorrect. Okay. Denied entity list. A firm may be placed in denied entity list by concerned RA. Optional. In such cases, the firm may be refused grant or renewal of any license, scrip, certificate. All new licenses will be blocked from printing, issue or renewal. Very, very strict. The firm's name will be removed from denied entity list by concerned RA if they complete the export obligation or pay the penalty or fulfill the requirements in the notice and submit the documents to the RA. Okay, now let's talk about provisions related to import of goods. I am sure it becomes very easy. See, this is given in the front part of ICI module, but I keep it at the end because if you start with this you will miss out on the main provisions, that is advance authorization, EPCG, etc. Now when you read actual user condition, do you know what is actual user condition? Yeah, let's see. Goods which are importable freely without any restriction may be imported by any person. However, if such imports require authorization, actual user alone may import such goods unless said condition is specifically dispensed by DGFT. Restricted goods, actual user only you can import it. Okay, import of specific categories. This you will mark for 2 marks. It could be as MCQ or it could be part of short questions. Maybe they'll give you 3 of such questions for 5 marks. Important. You should know these values. Like import of samples. Is it allowed? Even if it is restricted, it is allowed without authorization because it is a sample. Plus, duty free import of sample up to 3 lakh for all exporters is also allowed. Notification is not there in your syllabus, but up to 3 lakh they enjoy a benefit. Defense or security items or seeds, bees, new drugs, these may need authorization, but otherwise samples, even if they are restricted, allowed. Okay. Gift, it is allowed through post or courier where custom clearance is sought. Is prohibited. That means you can't get it. See, whenever you talk about samples, it is allowed for exporters, and that's why government has kept the provisions easy. But when you talk about gifts, there might be a misuse, and that's where government is very clear that import of goods as gifts is prohibited. But what about Rakhi? Rakhi is allowed, life-saving medicines is allowed. But can you get it on payment of custom duties? The answer is yes. So what is government trying to say? That even if I get a gift, I'll have to pay custom duty? Yes, that's what government is trying to say. Plus there is a less than 100 rupees, then it is exempted. If duty is up to 100, then no duty will be collected on the same. Wonderful. Okay, passenger baggage. Passenger baggage is regulated by Baggage Rules 2016. Bona fide household goods and personal effect allowed. You remember, used personal effect, no issues at all. Sample of items freely importable under FTP allowed. Let's see the footnote. Any item including samples, prototypes of items which are restricted or prohibited or channelized through state trading enterprise is not permitted as part of passenger baggage unless you have a valid authorization. That's obvious. Until and unless you have a valid authorization, you cannot import restricted or prohibited goods. By vessel or ship or aircraft or land custom station, allowed when you file bill of entry. But as passenger baggage, you can't get restricted or prohibited items unless you have a authorization to that. Drawings, patterns, labels, price tags, buttons, belts, trimming, embellishments required for export can be imported as passenger baggage up to prescribed limit. Is the limit there in our syllabus, sir? No. Okay, what do you think? Just think about this. Re-import of repaired goods, will it be allowed? Sir, if the main product was allowed, I sent it for repair and now it is coming back. Yes, it is allowed without an authorization. In fact, do you remember the custom payable on this? Fair cost of repair plus material cost plus to and fro freight and insurance. Goods used in project abroad. Now say suppose a machine is used in Dubai because you got a construction contract there, so you purchased a machine there, you are using it in Dubai. Now the project is completed. Now can you bring it to India? Yes, you can bring it to India, but at least it should have been used for 1 year there. Then in that case you can bring it easily. Goods used in projects abroad. Project contractors after completion of project may import without authorization because it is second hand. Now please understand, it has been used, but still government says no problem, you have only used it for at least 1 year. That means it's not a fake transaction. Otherwise what you will do is you'll use it for 1 month there and import it as second hand goods and pay less custom duty. Government is like, at least 1 year it should have been used outside India. Used in the project, provided they have been used for at least 1 year. Remember this 1 year. Important. Prototypes, new second-hand prototypes, second-hand samples may be imported without an authorization. But let's see the condition. Subject to actual user. He is engaged in the production or it is related to some research activity. And he files a self-declaration to this extent. Okay. Metallic waste or scrap. What do you think? Metallic waste or scrap. Will it be allowed to be imported? It is allowed subject to the condition that it does not contain hazardous, toxic waste, radioactive containment or radioactive material. Any type of arm, ammunition, mine, shells, live or used cartridges in any form which is used or otherwise. Obviously, we don't want other developed countries' waste to get accumulated in India because discharge of waste is very difficult. So sometimes it is sent to other developing countries like India, or some backward countries also are receiving this so that it can be dumped in that area. Okay, let's see second-hand goods market is important. What do you think? Generally, will government allow second-hand goods? Now, you should keep two things in mind. See, second-hand goods can be of two types. Second-hand capital goods and second-hand goods. Think. Second-hand capital goods. Machine etc. allowed. But e-waste, computers, printers, air conditioners, power generating sets, these e-waste require a license. Otherwise, machine etc. you can bring second-hand capital goods. And sir, what about second-hand goods? Second-hand goods, generally, it will not be permitted without a authorization. Let's have a look at this diagram given in ICI module. Let's talk about capital goods first. Restricted, meaning you will require a authorization for AC, electronic waste, diesel generating sets, desktop computers, refurbished, reconditioned spares or parts of PC and laptop, e-waste. Otherwise, developed countries will send e-waste to India. Any other notified electronic and IT goods. So you understood the objective. Free for import, refurbished, reconditioned spares of capital goods for which chartered engineer certificate certifies that 80% life is still there. That means it's used for very less time. Then freely importable if you have the chartered engineer certificate. All other second-hand capital goods other than those listed above. Freely importable. So e-waste is what government is trying to restrict. Now, other than capital goods, remaining goods restricted. You understood? Capital goods, at least second-hand machine, government is still fine. But other than capital goods, getting second-hand inputs, government is saying restricted. Then which is allowed, sir? Only if it is for the purpose of repair, refurbishing, reconditioning or re-engineering, then allowed. So you are getting those goods not for using it in India. You are getting it for repair, reconditioning, re-engineering, and then you are going to send it back. Then freely importable subject to specified condition. So capital goods, e-waste, government is saying no, it will be restricted. You need a license. Others, government says allowed. But second and other goods, not allowed generally, restricted, and only if it is for repair, reconditioning, etc., then it is allowed. Great. Okay. Now let's see some miscellaneous provisions regarding to imports. We are just at the end, miscellaneous provision and export. Now, regarding import, some of the provisions to be noted are: goods for import into India can be sold on high sea subject to FTP. Can you sell on high sea? The answer is yes. You learned this in negative list. High sea sales covered by negative list, schedule 3. Merchant trading means shipment of goods from one country, foreign country, to another foreign country. See, this is not merchant exporter. This is merchanting trade where goods don't enter into India. Again covered by negative list. You learned this. Without touching Indian ports, obviously these are allowed subject to RBI guidelines, except for goods in cities. Sir, what is this cities? New terminology. Convention on International Trade for Endangered Species of Wild Flora and Fauna. Plants and animals which are restricted. Government does not want India to be involved in those species trades which are endangered species. And SCOMET list. Obviously, SCOMET, India doesn't want it to be imported in India. Neither someone should act that it comes from US, goes to Sri Lanka. Import of capital goods under lease financing. Aircrafts, all aircrafts come in lease financing. Two major companies are in France and US. Does not require any specific permission from DGFT. It's allowed. For imported goods, bank guarantee letter of undertaking or bond is to be executed with customs in case of duty-free imports. That is obvious. See, wherever you want to import duty-free, you'll have to give some assurance to the government that if I don't pay, then you can realize the money through my bank guarantee. Before clearance of goods, for indigenous sourcing, execute a letter of undertaking bond before sourcing such material. Okay, we enter into the last part, that is export of goods. Now these are much simple compared to imports. See, all goods may be exported without any restriction except exports which are regulated under ITCHS or other provisions of FTP or other laws. Like customs also has some prohibited list for export that has to be followed. Benefits for supporting manufacturer, tell me, will the supporting manufacturer also get the benefit? Yes, provided his name is mentioned. Both names should figure. Merchant exporter, supporting manufacturer, both names should be there. Third party exports allowed? Obviously yes, third party exports are allowed. That's merchant trade. Should there be a bank realization certificate? Yes, it has to be there. And should both the names be there? Yes, name of the third party exporter should also be mentioned. Sir, what's the difference between supporting manufacturer and third party exports? Now, supporting manufacturer is tied up to the merchant exporter. He might be as a advance authorization holder along with the merchant exporter, EPCG holder along with the merchant exporter. But third party export, it might be possible that there is a manufacturer, he is not involved in any advance authorization, he is selling it to merchant exporter, then merchant exporter is the third party exporter. Okay. Samples allowed, sir. Without any limit you can export trade and technical samples which are freely importable. Gifts not exceeding 5 lakh can be exported as gift. But if it is a restricted item, then it shall not be allowed to be exported as gift without an authorization. Restricted item will require an authorization. Passenger baggage may be exported either with him or if unaccompanied within 1 year before or after passenger departure. However, restricted items will not be exported as gift without an authorization. Samples that are freely exportable can be exported as part of baggage, because the same rules apply as we learnt here for even passenger baggage. Authorization will be required for restricted items. Samples which are freely exportable, no problem, that can become part of exporter's passenger baggage. Now what do you think of import for export? You import it for export, allowed without authorization. Goods which are, now this is, it has provided all the categories. See it very carefully, people. Here now I need your full attention. If it is freely importable and freely exportable, no problem at all. Import and export without authorization. See the second one, which can be goods including capital goods, can be imported under custom bond and then cleared for export against freely convertible foreign currency, provided that they are freely exportable. These goods include goods which are restricted for import. People, see here, free import, free export. Do you need a license? No authorization required. No authorization. Restricted import, free export. Is it allowed? Yes, allowed. Because this restricted import, you are not using it in India, you are again exporting it, allowed. Now see the third one. Capital goods that are freely importable and freely exportable can be imported for export upon execution of letter of undertaking or bond. This is also allowed, sir. Yes, you just have to execute LUT. Notwithstanding the above, goods other than Indian origin that are restricted for export but free for import. What do you think? Can be imported for export in same or substantially the same form. Allowed, sir. Allowed. No problem. Such goods may be kept in bonded warehouse and re-exported from that warehouse as per the provisions by filing a shipping bill. Sir, then what is not allowed? In import for export, there is nothing which is not allowed. If both the cases it is restricted, then obviously you'll have to take authorization. Otherwise, if import is free, export is free, no problem. If import is restricted, export is free, no problem. Import free, restricted export, no problem until and unless it is prohibited or SCOMAT product. Prohibited and SCOMAT product will not be allowed. That you cannot import and export. Goods that are imported against freely convertible foreign currency can be exported only against freely convertible foreign currency. Okay. Now, payment and receipt of import and export. What should be the denomination of export contracts? Can export contracts be in INR? The answer is yes. But the realization should be in foreign exchange unless otherwise permitted. Some cases RBI also permits INR. That's what is mentioned here. Let's have a look. Export contracts may be denominated in either INR or freely convertible currency, but export proceeds should be realized in freely convertible currency. However, in specified cases, Indian rupees is also allowed if permitted by RBI. If you don't realize the foreign proceeds, penal action will be done and you have to return all the benefits. Do you agree with this? Obviously. But you may also approach RBI for writing off of the unrealized amount. And sir, can we get credit? Yeah, obviously. Export credit agencies are there which provide financial support to exporters. They support export by insurance, guarantee, and also direct money lending. Okay. What do export promotion councils do, sir? They will again help you to carry out your export transactions. Export promotion councils, in fact, merchant exporters are to be licensed or are to be given permission by export promotion councils. Are organization of exporters set up to promote and develop Indian exports. Each council is responsible for promotion of a particular product or service. Export promotion councils are eligible to function as registering authorities. They will provide this registering cum membership certificate, because this is required to be furnished for by any person applying for a authorization. Without that, you cannot apply for any authorization. Self certification of origin of goods. In fact, you have already learned this in status holder. You remember this? Let's see. Till now, certificate of origin of goods was issued by designated agency, but now self certification is allowed for approved exporters who are also status holders. We read this in status holder that self certificate, you can give a self certification on the origin of the goods. Who is the approved exporter will be entitled to self certify their manufactured goods as originating from India. Circle. For qualifying as preferential treatment under preferential trade agreements, free trade agreements, comprehensive economic cooperation agreements, and comprehensive economic partnership agreements which are in operation. Self certification will be permitted only for goods that are manufactured as per Industrial Entrepreneurship Memorandum. We read this in status holder. Industrial license, which is anyways required for all the factories operating under industries law. Letter of intent, which is issued to the person outside India, mentioning what you intend to supply and what is the export which you intend to do. So those details should be there. Only then you are allowed to self certify. Plus you have to be a status holder. This we had read in status holder. So this is the FTP 2023. This is where FTP comes to an end. Wishing you all the best. Go through these provisions again.